Hello, everyone. Good morning, or good afternoon, or good evening, depending on where in the world you're from. And I can see people from all around the world, over 80 countries today. Great to see all of you, and welcome back. Welcome back to day two of the anti-bubble mania event. Did you guys catch the webinars yesterday? If you have not caught them yesterday, so do catch them in the limited time replays that we'll be sending to you. Yeah. So yesterday I started off by talking about the great rotation that you're already beginning to see in the market, the great rotation from the AI bubble stocks into the anti-bubble stocks that will lead the next stage of the bull market. And I also said that not the entire index is in a bubble. Only certain parts of the market are in a bubble. And I highlighted exactly which parts they were. The new clouds, the nuclear stocks, the space stocks, and so on and so forth, right? And I said that as this rotation takes place, what are the anti-bubble sectors to pay attention to? Like healthcare, like consumer discretionary, like financial toll booths, and so on and so forth. And I also yesterday kind of like mentioned how long I think this AI boom will last. So check out the video and get all the details. And I also talked about after the AI boom, we should see the secular bull market continue for at least the next 3 to 4 years. And then what happens then if the market goes into a long-term bear market as it does historically? How do we still compound our wealth by 15-20% a year, even with great stocks? And it can be done. I've shown how it can be done. Yeah. And I also showed you yesterday the exact formula that I use to identify the top 1% of businesses, of stocks that can outperform the market. So that's how we build our wealth a lot faster. So do watch that webinar. Again, if you have watched it already live, you can always watch the replay as many times as you like during this limited period, and then it's taken off forever. Okay. And then we had Alson Chu who came in. Alson talking about how the market is manipulated every day by market makers, by algos, and how do you take advantage of the manipulation? And I think he shared some strategies that he uses, like the bull trap, the bear trap, and stuff like that. So how do you take advantage of these techniques to squeeze out all the profits from the rest of this AI bull run? Yeah. So again, you can watch those webinars again for this limited period. And as always, we have got our courses and our mentorship subscription playbooks at up to 50% discount during this limited period. So go grab it while it lasts. Yeah. Okay. So for today's webinar, I'll be focusing on who knows? Okay. Do you know what my webinar is on today, by the way? Yeah, my webinar today, my focus is on options, which is my favorite topic. I'm one of the most passionate about options, and I trade options every single day. Okay, so today I'm going to show you how I use options in swing trading, in short-term swing trading, and how I use options to turbocharge my long-term investment portfolio. Yeah, so like I mentioned, I trade options, every single day. I first learned options about 18 years ago. And when I first learned it, I can tell you I was completely lost. I was so confused. Either my teacher was not very good or because I'm a slow learner. I think it's both, right? But I was totally confused. So I'm here to tell you that the first time you learn options, if you are confused, there's nothing wrong with you. It's completely normal. Okay. So options, when you first learn it, seems a bit confusing, but don't give up. I didn't give up. I kept asking questions, going through the materials until I got it. It took me a while actually, right? But once I got it, it was a game changer in the way I trade and the way I invest. And today I can tell you that I cannot live without options. I trade options every single day. It contributes significantly to my profits in trading and investing. So it's kind of like riding a bicycle. How many of you can ride a bike, by the way? Any of you can ride a bike? I think most people, or you can swim, right? How have you found it difficult when you first started riding a bike? right? It was very challenging to balance, But again, if you didn't give up and you kept, going on it, you may fall down a few times, but once you learn to ride a bike, what happens? It becomes so simple. It becomes so simple and you never forget it. Yeah. So today, I'd like to hopefully inspire you, okay, to really master options. And I'm here to tell you that, again, whether you are a trader short term like Alson or a longer term investor like me, options is very, very powerful. Yeah, if you're serious about the markets. Okay. Now, so people ask me, they say, Adam, so, I've learned investing, stock investing from you. I've learned about trading, from you and from Alson. So how does options complement it? Okay, how does options make trading or investing better? So I thought of an analogy. Okay, so here's my analogy. So for example, yesterday, Alson taught you the price action manipulation technique. How do you identify high probability trade setups? Okay, where you enter the trade and it's got a high chance of moving in your direction, correct? Okay, so the analogy I can give you is like a soldier. So when Alson and myself, we teach you how to identify trade setups. We tell you where to put the stop loss. We tell you where we enter. It's like as a soldier, you learn how to find the enemy, how to identify the enemy, how to aim your weapon, how to take cover, and how to run if the enemy spots you, correct? All right, so that is what you've learned in trading and investing, okay? What option does is options gives you more weapons. So instead of just a normal pistol or a normal M16, you have got all these really, really, really powerful weapons that even I'm not familiar with in the military world, right? HK416, or you got the Uzi, you got a shotgun, you got the GPMG, you got the Barrett, and you got all these weapons. So why does, special forces, why do they need so many weapons? Why can't they just use one handgun or one rifle? Why must they use so many weapons? Because different weapons are used for different situations. It allows the soldier to be a lot more flexible depending on how far the enemy is, how much of a lethal kill they want. Make sense? Okay. So same thing with options. So with options, you have now the flexibility of using different option strategies in order to increase your win rate, to use less capital, and to profit in more ways than one. Because if you just buy stocks, you can only make money if the price goes up, correct? You don't make money if the price goes sideways, for example. But with options, you can make money whether the price goes up a lot, goes up a little, goes sideways, goes down, goes in circles, right? So it gives you that range of flexibility. Does this make sense, everyone? Okay, does this give you a general idea? Options gives you a lot more weapons to use in your trading and investing. Okay, cool. Now, as always, disclaimer, I'm not a legal financial advisor. Okay, so I don't give financial advice. All the stocks I mentioned is not a recommendation for you to buy or sell. I'm sharing it for educational purposes. I'm a retail investor. I manage my own money and my family's money. I don't manage money for anyone else. Yeah, so just bear that in mind. Okay, good. So let me start off by talking about the difference between investing and trading, because they are two totally different games, right? It's like comparing basketball with golf. They are both totally different games. I mean, they both use balls, all right? Both need you to put the ball in the hole, but they've got different rules. One uses a club, one uses your hand, and so on and so forth, right? So very different. So let me explain the difference, yeah? So first of all, investing. Now, I focused on investing yesterday. Today, I'll focus on trading, okay? So as you learned yesterday, when we invest in a stock, okay, in businesses, we only want to invest in what? The top 1% of the fundamentally strongest businesses or stocks in the world. Could be stocks, or could be REITs, real estate investment trusts, or could be bonds, for example. Yeah. So what did I say yesterday? I said that 99% of stocks are uninvestable. Remember me saying that? Remember me saying that? 99% of stocks are uninvestable. Why? Because the 99% of stocks, they may be overvalued. They may not have consistent, predictable profits. So these stocks may go up in the short term, but long run, they may collapse. All right. So how many of you have seen stocks? They go, whoa, boom, and they collapse. How many of you have seen stocks like that? Okay. So for stocks like that, you cannot invest. You cannot invest. But if you want to make money from it, you have to get in and get out very fast. Now that's called speculation. That's called trading. That's not called investing. Very different, right? So for trading, we focus on the 99% of stocks that only may go up in the short term, but are not sustainable, which are most stocks actually, right? Now, we also trade options, which I'm going to talk about today. You can also trade Forex. You can trade cryptocurrencies. Now, please, for goodness sakes, cryptocurrency is not something to invest in because it is a non-productive asset. It goes up a lot, but it can collapse and go to zero, right? So it's just for trading. And of course, futures. Futures and options have expiry dates. They expire within a certain period of time. So you can't invest in them. You have to get in, get out, get in, get out. You got to trade them. Is that clear? So very different concept. The other analogy I gave yesterday is that investing is like getting married. And you only want to marry someone who has got great character, someone who's like all-rounded, right? But trading is like a one-night stand. It's like a short-term affair. You get in, get out, and for one-night stand, you got to use protection. Okay? Whereas investing, you don't use a stop loss. There's no protection, right? So it's a different concept, okay? So investing, the focus is what? Buy low and sell high, right? We buy undervalued great companies. And for investing, 90% of the decision is based on fundamentals, on understanding the business financials. The valuation is fundamentals, right? Whereas in trading, we don't care about fundamentals. We don't care about the business. We don't even know what the business is doing. For trading, we focus purely on the price action. And in trading, we don't care about intrinsic value. We don't care, right? Because like crypto has no intrinsic value. Commodities have no intrinsic value. Trading is like buy high, sell higher. It's the greater fool's theory. You buy, even if you're full, sell to a bigger fool. So different concept, okay? Investing, you take a medium to long-term view, right? Medium to long-term view. Trading is very short-term, days and weeks. You get in, get out within a few days, a few weeks. Yeah. Investing, we do not use stop losses. We do not use stop losses. Why? Because you buy great companies. If it drops, you sell, you're an idiot. You're an idiot. Okay. If it's a great business, it drops, you want to hold and buy more because great companies will always go higher later on, whether it's in McDonald's or Visa or MasterCard or Google, right? In fact, you want to buy more when the price goes down, you average down. But in trading is different. Trading, the moment the price drops, you got to stop loss, got to cut loss, get out. Okay, why? Because it may never come back. It may never come back, right? Because these are the not great companies, yeah? And same thing, because in trading, you cut loss, but when the price goes to your direction, you got to take profits fast as well. All right, you see the difference, guys? This is just a very quick review for those of you who are not clear with this. Now, investing, because you have a longer time frame, you're buying great companies, so your win rate is a lot higher. Your win rate is 80 to 90%. And even 100% if you're very, very strict in buying only the top tier companies, yes, it's 100% if you are very, very strict, okay? Now, for trading, can you get 100%, 80% win rate? Can you get 80% win rate for trading? Normally, no. but you actually can do it with options, which I'm going to show you later. All right? But if you just trade stocks, the win rate for stocks is about 50 to 60%. In fact, if you can get a 60% win rate as a trader of stocks, you are among the best traders in the world. In the world, if you can get 60%, okay? And of course, trading, there's more frequency. You get in, get out a lot more. Investing is less frequency. Investing, you profit when obviously prices go up. But trading, of course, you can profit whether prices go up or prices go down, because you can go long or you can go short on the stock or the commodity. Yeah. Investing, the main objective is wealth accumulation, building generational wealth, where you're looking to buy stocks that would 10x, 20x, and your portfolio compounds. But in trading, we take short-term profits. 10%, take the profit. 20%, take the profit. And find the next trade, find the next trade, find the next trade. Investing, once we buy a great company, we let it compound and we don't get out that easily. So, are you clearer on the difference now, guys? Very good. So, like I said, for today's webinar, let me focus more on the trading part. Okay, so let's look more on trading. Now, first of all, you have to understand the reality about trading. How many of you here have attempted to trade before? Trade stocks, trade crypto, trade something? Any of you who has some trading experience? Okay, great. So the reason why a lot of people lose money in trading is because of a lot of myths that they believe. So let me separate the myth from the reality, because I've been trading for 30 years, okay? So I can tell you what's bullshit and what's real. So myth number one is that newbies always think that successful traders can predict price movements. They can predict where the market is going next day, next week, next month. They can predict where this stock is going. Is this true? No. If someone tells you they can predict the stock market, they can predict where the stock is going, they are a scammer. They are a scammer. Okay? No one can do that. The great Warren Buffett cannot predict the stock market. The Federal Reserve Chairman cannot predict the market. No one can predict the market. Alson cannot predict the market. I cannot predict the market, right? So that's the biggest bullshit. And as long as you believe that someone can predict the market, you will always lose money, because that's the wrong mindset. So what's the reality? The reality is that successful traders cannot predict this market. They can only identify high probability setups. Please write this down somewhere. They can only identify high probability setups, which means, is this stock more likely to go up or go down? What's the probability? But there's no guarantee. There is no guarantee. No one knows. Because Trump can make one tweet and everything changes. Unless you can read Trump's mind, you sleeping next to him at night, you can hear him talk in his sleep, no one can predict the market, okay? Or unless you're Trump and you're manipulating it, then of course you can predict it because you're manipulating it, yeah? Okay. Now, myth number two is successful traders have high win rates. They win most of the time. Is this true? Is this true? Again, if you believe this, I'm sorry, you always lose money, right? If you look at the best traders in the world, the most successful traders in the world, their win rates for trading are never more than 60%. In fact, Richard Dennis, who is one of the best traders that ever lived, you can go and Google him, Richard Dennis. I think he turned something like 10,000 into 50 million or 100 million, right? His win rate was only 30%. 30% win rate. And he's one of the best traders in the world. You say, only 30% win rate. How did he make 50, 100 million? Because of the risk to reward. What does that mean? When he loses $1. Okay? And he loses 70% of the time. Okay? But the 30% of the time he wins $5, $6, $10. Okay? So even if a low win rate, if your profit from the wins are much more than your losses from the losers, you are very profitable. Is that clear, everyone? Okay. So understand that. So the reality, again, like I said, successful traders win 50 to 60% of the time at the most. At the most. If you can get a 60% win rate, you are among the best in the entire world. You probably will not be here listening to me. Okay? But I'm going to show you later that with options, with certain option strategies, you can increase the win rate from purely stock trading. So the key to profitable trading, if you want to be a profitable trader, the key is to ensure that your profits from your winning trades must exceed the losses from your losing trades. That's it. Very simple. But you will have losing trades. It is impossible not to have losing trades. All right? It's just to ensure the profits cover the losses so you have a net profit. What is that called? That's called business. Now, how have you realized that in every business you've got revenue minus cost equals to profit, correct? So winning trades are like revenue. You cannot say in a business, I only want revenue. I do not want cost. No such thing. There's no such business. It doesn't exist, right? It's unrealistic. So when you have a winning trade, it's revenue. Losing trade is a cost of the trading business. So as long as revenue minus cost is profit, you're doing great. Simple? Are you following me? Okay, great. So let's talk about 3 points in every trade. Now, in this session, I'm just going to talk about trading long. I'm not going to talk about trading short. Okay, that's beyond the scope of this webinar. But in all our courses, in our trading courses, we teach you how to go long and how to go short. Go short means you bet against the stock. You make money when the stock drops. Yeah, so that's covered in the course itself, in Alston's course as well. Right? Okay, so when you enter a long trade, remember, you must always enter 3 orders together. A broker will call this a bracket order. So if you use any good broker, you can enter 3 orders in a trade. It's called bracket order. So what are the 3 orders you enter at one time? First, you enter the buy order. Okay, the buy order. And then simultaneously, you enter the stop loss, which is the price you will exit at a loss if the stock doesn't go in your direction, right? And the third order you place is the take profit order. So here's a very simple example. Let's imagine you identify a high probability trade. You say, okay, there's a good chance it's going to go up, right? So you buy at $90. And then you put a stop loss at, example, $87. Now, some of you may ask, why 87? Why not 86? Why not 80? How do I know where to put a stop loss? Okay? So what do you guys think? Where do we put a stop loss for a trade? Where do we put a stop loss for trading? It depends on the trade setup. Yeah. So for those of you who attended Alston's webinar yesterday, did he show you where he puts a stop loss? Did he show you? He showed you, right? Okay. So different strategies, whether bull trap, bear trap, trend retracement, the stop loss is placed based on that technique. So usually we place a stop loss below the recent swing low. Below the recent swing low. And I'll give you some examples later on. So let's imagine that the swing low is at 87. Okay. So listen, in this case, you buy at 90, your stop loss at 87. What is your risk per share? Every share you buy, how much are you risking if it gets stop loss hit? How much do you lose if it hits the stop loss? You lose $3. Oops, sorry. You lose $3, correct? So $3 is called your 1 hour distance. Please write this down. It is called your 1 hour distance. What does R stand for? Make a guess. What do you think R stands for? R stands for risk. Risk, okay? So your risk per share is $3. Yeah. And how do we decide where to put the profit target? how do we decide where to take profit? Okay, basically ideally you want to take profit such that you profit more than the loss. So example, if your risk is 1R, you want to take profit at more than 1R. More than 1R. Could be 1.5R, could be 2R, could be 3R, okay? Depending on the technique. So in this case, let's make it simple. We take profit at 2R. So if 1R is $3, 2R is $6, all right? Times 2, okay? So $6 above 90 is 96. Do you follow me so far? So understand the concept of 1R and 2R now? Okay, fantastic. Now, then the next thing is in trading, you have to know how many shares to buy. You have to know how many shares to buy, okay? So how many shares do you buy depends on this formula here. Can you see this formula? The number of shares to buy is equal to the percentage risk per trade times your net liquidation value divided by your risk per share. So this is the formula that all traders use. Yeah. So when you take our trading courses, Alson's trading course, these formulas are pre-programmed into the spreadsheet, into the spreadsheet, correct? Right. So you key it calculates the number of shares. Can you guys see this? You guys cannot see this? Can you see this formula over here? Dharmendra says he can't see it. The rest of you can? Okay, that's strange. Maybe you have to move your screen up, okay? So let me give you an example. So let's, now first of all, what is the meaning of net liquidation value? What is net liquidation value? That means the value of your account. How much is your account worth right now? So for example, let's imagine that you have an account with your broker and in there you've got $10,000. So that is called your net liquidation value. So net liquidation value is kind of like, sorry, let me move this. Yeah. Net liquidation value is basically your capital, okay? How much capital you have right now, capital, okay? Now, the next thing as a trader is you must decide on your risk per trade. You must decide on your percentage risk per trade. And once you decide, you should keep it consistent. Don't keep changing it, all right? It must be consistent. So for most traders, what do you think is their risk per trade? Harry is asking, can your NLV be more than your cash? Yeah, possible. Yeah, it's possible. So net liquidation value can be more than your cash. Yeah, definitely possible, of course. Yeah. Okay. Yeah. So most traders, their risk per trade is between 1% to 3%. Okay. Now listen very carefully. Never risk more than 3% on any trade. Never risk more than 3% on any trade. If you risk more than 3% on any trade, I guarantee you eventually you will lose everything. You will bust your whole account eventually. It's a matter of time. Okay. So don't ever go more than 3%. If you are a normal trader, I would say 1% is the best. Okay. If you're very aggressive, very gung-ho, 2% to 3%. Okay. So based on this, let's calculate how many shares do we buy for this trade. Now, if you cannot see the formula here, don't worry, I'm going to write it down for you again, okay? So the number of shares to buy equals to what? What's the formula? You take your risk per trade. Let's imagine you use 3% risk, okay? So we risk 3% of our capital. What's our capital? $10,000, okay? Very good. So what is 3% times 10,000? What is 3% times 10,000? $300. Very good. Okay. So the answer is $300. So what does this mean? This means that if you have a $10,000 account, the most you can lose is $300 per trade. Are you with me? I repeat, if you have a $10,000 account, the most you should ever risk per trade is $300. Okay? No, the 10,000 is not purely cash. The 10,000 could include cash and other stocks you own. Okay? It's basically, yeah, it's not just cash. Okay? Now, so the next step is to take your total risk, which is $300. Take your total risk, 300, divide by your risk per share. What's your risk per share? Your risk per share is $3. Okay? So 300 divided by $3 equals to 100 shares. Ta-da! That's your answer. Okay? So how many shares do you buy for this example? You buy 100 shares. Do you follow me so far? So what is the size of your position? What's the size of your position? So in this case, your position size is $90, which is how much you're buying it at, times 100, correct? So your position size is $9,000. So you're buying $9,000 worth of shares. Do you follow me so far? Just want to make sure you guys can follow me. Okay. Now, question, is $9,000 your risk? Is $9,000 your risk? No, it is not. You're not risking 9,000. Okay? What's your risk? Your risk is 300. Very good. Okay? So if you enter the trade, if it hits your stop loss, how much do you lose? You lose $3 times 100, right? So you lose 300 bucks. Correct? Which represents 3% of your capital, which is 10,000. Okay? Now, if it hits your profit target, you make $6, right? You make $6 times 100. So you make $600, which represents 6% of your capital. So can you see in this case, we are risking $300 to make 600? Or rather, we are risking 3% to make 6%? Yeah, so someone asked, if the stock gaps below the stop loss, can I lose more than 300? Yes, of course, that could happen. That could happen, right? Once in a while, that could happen. And that's why in trading, you never hold the trade across the earnings, because it's usually during the earnings when the stock could gap down or gap up. Never hold the stock through the earnings. Always get out before the earnings. Now, at the same time, even without earnings, could the price gap down sometimes? Is that possible? Is that possible? Yes, that's called sway, which means unlucky, all right? But at the same time, could the stock also gap up sometimes? Yeah, so that's called lucky, heng, all right? So the point is sometimes you could be unlucky, it gaps down, but sometimes it gaps up. So in the long run, it evens out. Follow? Yeah, so stop losses are not guarantees, but most of the time, you would sell at that price. Okay? Can I move on? Do we understand this whole concept? Okay, great. Let's move on. Now, so if you trade with that concept, okay, where you risk 1 hour to make 2 hour, or you risk 1 hour to make more than 1 hour, okay, what happens? Let's take a look. Let's imagine you do 10 trades a month, which is not a lot, but let's say you take 10 trades a month. So that's 120 trades a year, correct? And again, what's your win rate? Like I mentioned, if you take high probability trade setups, which I'll show you more of later on, okay? So let's assume that you have a 50% win rate. 50% win rate, yeah? So that means that in 120 trades, you will win 60 trades and you will lose 60 trades. Agree? And let's assume that every time you trade, you risk 1%. Let's be very conservative. Okay, instead of 3%, you risk 1%. And if you lose 1% of your capital. If you win 2% of your capital. So what does this mean? This means that for the 60 times you lose 1% of your money. And the 60 times you win, your capital will grow by 2%. So 120% minus 60%, that gives you 60% return a year. Is that good? Not bad, right? Okay. But let's be more conservative. Let's say you cannot get a 50% win rate. Let's say you can only get a 40% win rate. Okay, 40% win rate. So that means that 10 trades a month, 120 trades a year, you should expect 48 winning trades and 72 losing trades. Each time you lose 1%. Each time you win 2%. And that gives you 24% return a year. Is that okay? Is that okay? Not bad, right? Okay. So what's the point I'm making? The point I'm making is that your win rate is not the most important thing. Your win rate is not the most important thing. Okay. The most important thing is to control your risk to reward. Is to make sure you cut loss at 1%, you take profit at 2%, and you keep repeating. And so this is trading. Different from investing, which I talked about yesterday, very different concept. So this takes, of course, a lot more effort because a lot more active in and out, right? Now, of course, I'm not taking into account commissions, okay? But nowadays, most brokers, their commissions are negligible. And of course, I'm not taking into account taxes as well, right? Depending on your country, like in Singapore, we have got zero capital gains tax. So there's no tax to talk about. But of course, in different countries, like in Europe, you may have taxes. So that may impact it as well. Understand? Okay, great. So in other words, let me conclude. To be a winning trader is not about predicting the stock market because no one can predict the stock market. Okay? I told you that. To be a winning trader, number one, you must know the right market conditions to trade. Do you think that every day you can find a trade? Do you think you can find a trade every day? No. In fact, there are many days there's nothing to trade because the market is very choppy. When the market is choppy and there's no signal, you do nothing. In trading, doing nothing is doing something. Write this down. Doing nothing is doing something. People who think they must trade every day, people who think they must buy every day will all die. Okay, you only trade when the conditions are right, which means you have a clear, high probability trade signal, which Alson teaches, and I teach as well. Okay, so know the right conditions to trade, which I'll show you more in a while. Number two, take only high probability trades. Do not take low quality trades, take high quality trades. Number three, risk a small percentage of your capital per trade, which I mentioned 1% to 3%. Do not exceed 3%. Finally, manage your risk to reward ratios, which means 1R, always risk 1R to make more than 1R. Some people, they risk 1R to make 1.5R, that's fine as well, or 1R to make 2.5, that's fine as well. Just be consistent. Okay, so far, is it useful? Have you learned something new? Okay, great. So next thing, let's talk about knowing the right conditions. One reason why traders lose money is because they apply the wrong strategy, or rather, they apply the right strategy to the wrong stock stage. Okay, what do I mean? Now, if you look at any stock, okay, you look at the chart, they go through 4 stages. Let's take a look at this example. The first stage, we call it stage 1, is called the broad consolidation stage. So during this stage, you find that the price is going in a sideways consolidation. It goes up, it goes down, 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 right? So it's like going sideways in a broad consolidation. Now, how do you know it's in stage one? I teach you a very simple technique, okay? You will notice that the moving averages, can you see these blue, green, and red lines? Can you see the blue, green, and red lines? Okay, you learn all this in the course. Basically, the blue line is the 50 moving average. Okay, this is the blue line, the 50 simple moving average. The green line is the 150 simple moving average, and the red line is the 200 simple moving average. So I'm using the 50, the 150, and the 200 simple moving averages. Okay, now whenever you see these three lines are crisscrossing, can you see that it's crisscrossing? Can you see it's crisscrossing here? Whenever the lines are crossing, it means the stock is in a consolidation. It means it's in stage one. Very simple, right? Okay, good. Then stage two is what we call the uptrend stage. This is called an uptrend stage. An uptrend is when you see higher highs and higher lows, right? Uptrend is wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, wave up. So you're making higher highs and higher lows. Now, another simple way to identify stage two is look at the moving averages. What do you notice in stage two? What is happening to the moving averages? Do you notice what is happening to the three moving averages in stage two? What happens? Yeah, correct. Number one, the 50 is always above the 150, and the 150 is always above the 200, which means the blue line is always above the green line, and the green line is above the red line. And they are sloping upwards. Can you see they are sloping upwards? Can you see they are sloping upwards? So then you know it's stage two. Very simple, right? Okay. Stage three is called the topping phase. Topping phase means it is hitting a top. So how do you know that it's a topping phase? Elson actually taught this yesterday as well. When you see the price going up 90 degrees, okay? So notice that in stage two, the price is going up in a 45-degree angle. 45 degree. Can you see 45 degree? Now, when it starts to go 90 degrees, it's called 90-degree angle. When it goes up, all right, we call this parabolic. It's also called parabolic. When it goes up 90 degrees and the price gets far away from the blue line, like a rubber band, right? It will snap back. It will snap back. That's called the topping phase. Okay? And then stage 4 is the downtrend phase. Okay? Downtrend is wave up, wave down, 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 wave up. Right? Where you got lower highs and lower lows. That's a downtrend stage. And again, how do you tell is a downtrend stage? Very simple. Look at the moving averages. What do you notice? Let me erase this so you can see it clearer. On a downtrend phase, what is the moving average pattern? Okay, you notice that the 50 is below the 150 and 150 below the 200, right? The blue line below the green line below the red line, and they are all sloping down. This is sloping up. Can you see that? Very simple, right? Okay, good. So once you understand this, when you look at a chart, you know, is this stage 1? Is this stage 4? Is it stage 3? So depending on the stage, you know which strategy to use. Okay? You know which strategy to use at different stages. Like for example, if you're trading options, what do you use in stage one? For stage one, what option strategies do you use? You use what we call sideways strategies, like iron condor, like diagonal spread, all right? Like jade lizard, like cash secured put, like covered calls, like wheel strategy. These are all stage one, okay? Now, stage two, what option techniques do you use for stage two? Again, if you don't know what I'm talking about, don't worry. Later, I'll give you more examples, right? In stage two, what option techniques that we use? We use bullish synthetic, bull bang. You can also use a bull call spread, for example, okay? Then stage four, you can use a bear put spread. You can use a bearish synthetic. So that's why I say options gives you all these different weapons that, you know, depending on the terrain, depending on the wind, you pull out different weapons to hit the enemy. Okay? Okay. Now, let's look at another example, Nike. So take a look at it. What stage is this, everyone? Moving averages are crisscrossing, crisscrossing, crisscrossing. Stage one, very good. Broad consolidation. And how about this stage over here? Moving averages are sloping up, blue above green, green above red. Stage two. And then how about here? Here you see the price is going up 90 degrees. Can you see 90 degrees? Stage three, topping phase. And finally, blue below green, below red, sloping down, stage four. And right now, Nike is still in stage four. Now, two things people often ask me. Number one, does it always follow stage one, two, three, four? The answer is no. It doesn't always follow the sequence. Sometimes from stage one, it can go to stage four. Sometimes from stage four, it can go straight to stage two. Sometimes from stage two, it can go straight to stage four. It may not go through stage three. Okay, so it doesn't always go in this sequence. What's the other question? Next question is, how long does each stage last? There's no definitive period. A stage one can last for 1 month. It could last for 1 year. All right. So there's no like time frame. You just have to recognize which stage they are. Yes, of course. All moving averages are lagging. Of course, all indicators are lagging. Yeah, absolutely. So if you are trading, again, let's take a look. How do you trade each stage? So again, if you look at a stock, let's say ARKG, this is an ETF, right? And you see this. Okay, you see this pattern. What stage is this? Okay, Coco is asking, how do we predict the future stage? You cannot predict the future stage. You can only see the stage now. So based on the current stage, you trade the technique for this stage. Okay, so what stage is this? This is a consolidation stage. Very good. So when you see a stock in this pattern, when do you buy? When do you take a long trade? When is the time to enter a long position? You identify the support and the resistance levels, right? You learn all this in the courses, how to draw support resistance, and you basically enter. Oops, sorry. It's too fast, right? You basically enter near support. Oops, sorry. So the whole key is to buy at support, take profit at resistance. So for example, here we buy. Can you see this here? And then when it bounces up, you take profit here. So you take profit here and you buy here and you put a stop loss here. So you put a stop loss below the swing low, you buy here, take profit here. So this is a very good trade because you can see your 1 hour is somewhere like that. But is this more than 2 hour? Is this more than 2 hour? Yeah, this is something like 3 hour, right? So this is a very good trade because you're risking $1 to make $3. Even if you're right, even if you are right 40% of the time, you make very good money. Okay. Now, Of course, you may say, Adam, how do I know exactly which point to go in? So this depends on the specific strategies, right? So Alson, he looks at what we call a bear trap patterns, right? So you can wait for a bear trap pattern. You can wait for a slingshot mean reversion pattern. You can wait for a trade the range pattern. I won't go into the details, but all this we cover in the trading courses. In Alson's price action manipulation course, in my stock trading course, all this is covered in detail. When we look at specific price action, we look at specific indicators to know exactly when to get in, right? So next, let's look at stage 2. So if you see, okay, first of all, would you agree that this is a stage 2? Is this now in stage 2? How do you know it's stage 2? Blue line above green line above red line, all sloping up. Very good. Clear stage 2. Now, whenever a stock is in a clear uptrend, okay, whenever it's an uptrend, where do you enter? Where do you enter? Depending on your strategy. Again, there are so many strategies that you can learn from Alson, right? And even myself, right? So example, you've got the trend retracement strategy. You got the breakout from base strategy. You got the breakout within base strategy. You got a flag breakout strategy. And Alson has got what he calls the uptrend reversal 1 and the uptrend reversal 2 strategy. So there are many of these strategies, okay? I'm just going to show you one right now, okay, which is called the trend retracement. The trend retracement, right? So the trend retracement is very simple. What you do is you wait for the price to retrace to the support level. Okay, so you can see wave up, wave down, wave up, wave down, wave up, wave down. So once the price drops to the support, in this case, the moving average is a support, right? The blue line acts as a support, right? Once the price hits the support, you wait for a bullish candlestick pattern. Okay, wait for bullish candlestick pattern. In this case, yeah, this is a bullish candlestick pattern here, right? And then ensure that it is oversold. The price is oversold. You can use the Williams percentage R, 14, default 14. Make sure that it's below minus 80. There, below minus 80. So this is called a high probability trade. Why? Because number one is on an uptrend. So uptrend means the momentum is going up, right? Number two, the price is hitting a support level. Number three, it is oversold. Number four, bullish candlestick pattern. So you got all these conditions that give it a high chance it will go up. Now, is it a guarantee? Is it a guarantee it will go up? No, there's no guarantee. Trump tweets something, it can collapse, right? There's no guarantee. It's just a probability. Okay, it's just a probability. Okay, so once we see, good probability, then we can enter a buy. And then below that, we put a stop loss. That's my 1R. And then I take profit at 2R here. Okay, you could have also entered here, right? See, wave up, wave down, bullish candle. This is oversold. Buy here. Stop loss here. Take profit here. Risk 1R to make 2R. That's called the trend retracement. Okay, now again, there are many more strategies. I won't go into it in this webinar. If not, we will take 10 hours. Okay, but in the courses, you will learn all these different strategies. Okay, this is in the price action manipulation course, and the stock trading course have different strategies. Okay. Right, so enter there, enter there. Okay. Next, uh, stage 4, which is the downtrend stage. Okay. Now, when a stock is in a downtrend, okay, can we still buy? Can we still take a long trade entry? Yes, because I think Elson showed you yesterday, right? So when a stock is on a downtrend, how do we know that there's a high chance it will reverse back up? Elson showed you this thing called the bear trap pattern. Did he show you yesterday the bear trap pattern? Yep, that's something I learned from him. Really, really powerful. I made so much money on that, right? So the bear trap pattern is also called the double bottom pattern, right? It's also called the double bottom pattern. So this occurred on constellation energy, for example, right? So first you make the first low here. That's called the first swing low, right? And then it makes another swing low here, lower than the first swing low. That's called a double bottom. And then when you get a bullish candle that closes above the first swing low, that is your buy entry. So I won't go into detail because he has covered this yesterday. If you have missed it, watch his webinar again. Okay? What I'm going to do today is to show you how I use options to execute these trades. Okay? How to use options to execute these trades. Okay. Now, let me show you this trade, which I actually entered recently. Now, first of all, this is on NASDAQ stock, okay, NDAQ. So again, look at the pattern. So this was the first bottom. Call it swing low one. This is a double bottom. Swing low two. So again, this is called a bear trap. Elson covered this yesterday. Please watch his webinar again to understand it because I won't go into detail. I don't want to repeat what he said, right? But this is called a high probability setup where high chance the price will reverse after a double bottom, okay? Now, so in this case, where do I enter the trade? Where could I enter the trade? So once I see this bullish markup bar, where do I enter the trade? Where do I buy? I buy there, right? I could buy there at $79.30, for example, okay? And where do I put my stop loss in this case? Where do I put my stop loss in this case? I put the stop loss below the swing low, right? Below 76.55. So I can put it at 76.40 or 76.30, just somewhere below that, right? So in this case, I put my stop loss at 76.50, for example. So what's my 1 hour? So I'm buying at 79.30, my stop loss at 76.50. What is my 1 hour? Remember, what is 1 hour? 1 hour is my risk per share. So 79.30 minus 76.50, very good. My 1 hour is 280. There we go. Now you have your 1 hour distance. Okay? And where should I take profit? Where should I take profit? So if I'm risking 1 hour, I must make more than 1 hour. So let's say I target 2 hour. So what's 280 times 2? 280 times 2 is 560. So what is 79.30 plus 560? My profit target 84.90. Right? And then you have to calculate how many shares to buy based on the formula I taught you. Yes? Okay. Now, so let's imagine, for example, that that same thing, you have to buy 100 shares. Let's say. So to buy 100 shares, how much money do you need to buy the 100 shares? How much cash do you need? You need $7,930 in cash to execute the trade, correct? For example, right? Now, some of you may say, but I don't have 7,930 cash. How do I do this? Okay. So Good news. Is there a way to use less capital? Is there a way to use less capital but still control the 100 shares? Yes, using options. That's right. Okay. So this is where you're going to learn how to use options to execute it. So with options, you use less capital and you can increase your win rate, your rate of return, and I'll show you some other strategies that can, again, make it more efficient. Okay. So let's talk about options. Now, I'm going to assume that most of you have learned options already. And if you have not, do your best to keep up. But I'll do a very quick review so that you understand some of the basics of options. How many of you have learned options before? Okay, great. So if you have not, again, this is a very quick review. Yeah. So first of all, what's an option? What's an option? An option is a contract. It's a contract between you and another party who you don't care who it is. Okay. And you can either buy an option or you can sell an option. Okay, you can either buy an option or you can sell an option. I'm sure I'll show you both, right? And there are two types of options you can buy and sell. Call option and put option, right? So let's go step by step. Let's make sure that I am on time. Okay, good. Let's go step by step and take a deep breath. Okay, you need the oxygen. Okay, good. So first, let's talk about call option. So if you buy a call option, you're buying a contract, okay? You're buying a contract that gives you the right. You have the right to buy 100 shares of a particular stock, like Amazon, like Apple, okay? You have the right to buy 100 shares of a stock at a specific strike price that you have locked in. That means you lock in a price to buy it at, and you can buy at this price anytime before the expiration date of the call option. Now, remember, every time you buy an option, you have to pay money. It's not free. Huh? So when you buy the option, you have to pay a premium. So when you pay this premium, you can now have the right to buy 100 shares at a specific price that you locked in before the expiration date. So let me give you an example. Let's imagine that now, let's say we have a stock called Amazon, okay? And let's say Amazon is now selling at $250. Now, when you buy a call option, when you think the price will go up or go down? When you think the price will go up or go down? Go up, right? So if you think that the price will go up, you can buy a call option, okay? So let's imagine that you buy the Amazon, oops, sorry. Oh, shit. Hold on. Sometimes it turns black. Give me a second. I gotta think how to work this out. Yeah, okay. So let's imagine you buy the Amazon 250 call option. So what does this mean? This means that you're buying Amazon call option at the 250 strike price. This is called the strike price. Okay, so this means that you have the right to buy Amazon shares at this price that you locked in, which is $250. Okay, and you can buy anytime before it expires. Now, what's the expiry date? Up to you. You can buy an option that expires in 1 day, in 30 days, in 1 year, up to you. Let's imagine that it expires in 30 days. 30-day expiry, okay? And when you buy this option, you have to pay money, right? You have to pay the premium. How much do you pay? Let's assume it's about 5% of the price. So you pay, let's say, $12, okay? $12 premium. Right? Okay. So once you buy this call option, what does it mean? It means that you have locked in the price at 250. So if Amazon goes to 300, what happens? You can still buy at 250. If Amazon goes to 500, you can still buy at 250. If Amazon goes to $1,000, you can still buy at 250. You have locked in the price. Is that good? Is that good? So you can buy it at 250 anytime before 30 days. Okay? So let's imagine Amazon goes to $300. And you have the right to buy at 250, right? You have the right to buy at 250, right? So how much have you made already? What are your options worth? You have the right to buy at 250, now it's at 300. So effectively, your options have made how much? $50, very good. But you paid $12 to buy the option. Correct? So you have to deduct your premium. So what's your profit? $38, that's right. So let me ask you this. The higher the price of Amazon goes, do you make more money? Amazon goes to 500, 1,000. Do you make more money? Yes, because you locked in the price at 250. So if you look at this chart, can you see the stock price here? And the profit or loss here? So the more the stock price goes up, the more you make. Can you see? The more the stock price goes up, the more money you make. But what if the stock price doesn't go up? What if the stock price stays at 250? It doesn't go up. Then what happens? Then by the expiration, your option will be worthless. And how much do you lose? The most you can lose is your premium. So can you see the maximum loss here? Right? If the stock goes down or the stock stays there, the most you lose is $12. That is the most you can lose. Maximum loss is $12, but when the stock goes up, your return is unlimited. So far, are we okay with call options? Buying a call. Is that clear? Good review? Clear? Okay. Now, let's look at the opposite. Give me a second. I'm going to, let me do something first. Hold on. Oops. Wait. Window here. Okay, this makes it easy. Okay. Now, when you buy a call option, must someone sell it to you? Yeah. So when you buy a call, someone sold you the call, right? So same thing. Instead of buying a call option, you can also sell a call option. So let's talk about selling a call option. So when you sell a call option, you're selling a contract to someone. Okay? And when you sell a call option, what happened? Instead of paying money, you are what? You are collecting the premium. Understand? So always remember this. When you buy an option, you pay money. When you sell an option, you collect the money. Okay? So in this case, I sell a call option, I collect the premium. So you may say, oh, free money, you get premium, right? Yeah. But as a call seller, what happened? I'm obligated to sell 100 shares of that stock at that strike price before the expiration date. So it's the opposite. As a call seller, I'm obligated to sell the 100 shares at that strike price. Now, you may say, how do I sell 100 shares? I don't have 100 shares to sell. Okay. So before you sell a call option, should you first have the 100 shares? Should you first own 100 shares? Yes, you should. Okay. Then it's safe. You must first own 100 shares of a stock, then you sell a call option. If you don't own 100 shares and you sell the call option, you can do that, but it's very risky. Okay, because you don't have 100 shares to sell. Okay, got it? Okay, so normally when do we sell a call option? Okay, earlier on we say you buy a call option when you think the price will go up, right? When you think the price will go up, you buy a call option. But you sell a call option when you think the price will not go up. When you think the price, if you think the price will not go up so much, then you can sell a call option. All right. So again, let me give you an example. So let's imagine that now Amazon is at $250. Okay. And you already own the shares. Let's say you currently own Amazon shares. You have got 100 shares. Okay. And you bought it at a cost price of 150. Okay. So I'll repeat. You currently have 100 Amazon shares. And now Amazon is at 250. Okay. Now, could you sell your shares now? Could you sell your shares at 250 and make money? Yeah, of course you could do that. You could do that, right? But instead of doing that, if you want to make a bit more money, what could you do? You could sell the Amazon call option at a strike price that is higher than the current price. So let's say you sell the Amazon call option at the 300 strike price. And when you sell, you get money, right? You get premium. What's the premium you get? You collect a premium. Let's say 2%. So let's say you get $6 premium. You collect $6 premium. Okay. And this call, let's say, expires in 30 days. 30 days expiry. Okay. Now, by selling this call option, again, what does it mean? You are obligated to sell the shares at 300, which you don't mind, right? Because you already own it at 150. Okay. So let's take a look at what happens. If Amazon goes down, if Amazon goes sideways, and even if Amazon goes up, but if Amazon doesn't go above 300, what happens? What happens if Amazon doesn't go above 300? Then the call option you sold will become worthless and you just keep the premium. So look at this chart. You can see the stock price. If the stock price doesn't go up, right? The stock price stays there or goes down, you keep the premium. Free money. Okay? But if Amazon goes above 300, what happens? What happens if Amazon goes above 300? Then you are obligated to sell Amazon at 300. But you bought it at 150. Right? So you sell at 300, are you happy enough? Are you happy you're selling at 300? Yes. So you sell at 300, how much money do you make? You bought at 150, you sell at 300, you make $150. Plus, you still keep the $6 premium. So it's 156. Okay? So you can see that if the stock price goes up and you own the shares, there is no loss. There's no loss. It's only profit. There's no loss. Now, the loss here is only if you don't own the shares. If you don't own the shares, then stock price go up, you will lose money because you don't have the shares. And then you have to buy the shares at a higher price, let's say 400, to sell it at 300. And that's how you can lose money. All right. So as long as you own the shares, there is no loss. There's only profit. Now, again, I'm not going to go too much into this, but this is to just give you a rough idea. And again, you can sell the call option at 30 days, 40 days. You can choose any expiration date. Usually, I choose 30 to 45 days. Any of you confused yet? When I first learned this, at this stage, I was really confused. I was like, I don't know. I don't know what you're talking about. But it's okay. If you're confused, it's normal. Nothing wrong with you. Everyone gets confused the first time, okay? That's why after this webinar, rewatch a few times during this limited replay period until you go, I got it. And of course, in the course and the mentorship system, we will handhold you to make sure you understand this stuff. Because once you understand this, what happens? It's a game changer. You are way ahead. You are way ahead of all the other traders and investors because you got so much more ways of making money. Okay. Okay, let me move on. In case I take too much time. Okay, next one. Let's talk about put option very quickly. Okay. Okay, so when you think of call option, call. Okay, put means sell. Call means buy. Put means sell. Okay. So when you buy a put option, what happens? When you buy a put option, you have the right to sell 100 shares of a stock at the price that you locked in. That's called the strike price. And you can sell 100 shares of the stock at this price you locked in anytime before it expires. Now, same thing. When you buy a put option, must you pay money? When you buy a put option, must you pay money? Yes. So you pay a premium and you have the right to sell the shares at this price. So when do people buy put option? When they think the stock price is going to go where? When they think the stock price is going to go down, they buy a put option to make money as the stock goes down. Okay, so people who buy put option, they think the stock will go down a lot, they buy a put option. Okay, so let me give you an example again. So let's imagine that again, Amazon is at $250. Okay, and you think that Amazon will go down. You think it will go down. So what do? You buy an Amazon put option at a strike price that you locked in. So let's say 250. Okay. So you lock in the sales price at 250 and expires in 30 days. And when you buy the put, you pay money. So you pay a premium of what? Let's say $12. Okay. So again, once you buy this put, what happens? You have the right to sell Amazon at 250. So no matter where Amazon goes, you can sell it at 250. You have locked in the sales price. So even if Amazon goes to zero, can you still sell Amazon at 250? Yes. Okay. All right. Of course, it won't go to zero. Okay. So let's imagine that Amazon from 250, Amazon drops to, let's say Amazon drops to $200. Okay, Amazon drops to $200. But you have the right to sell it at 250. Okay, you can sell it at 250. Now it's at 200. So theoretically, you could buy Amazon at 200 and sell it at 250. All right. So which means now, what's your profit? Amazon's at 200. You can sell it at 250. So your profit is $50. But you paid $12 to buy the put, right? So you have to pay the premium. So your net profit is $38. Got it? So if you look at the chart, you can see opposite. When the stock price goes down, the more the stock price drops, the more profit you make. Can you see? The more the stock price drops, the more profit you make. What if the stock price doesn't go down? What if the stock price stays at 250 or the stock price goes up? What's the worst that can happen? The worst that can happen is you lose your $12, right? Your risk is maximum $12. That's it. So limited risk, big reward if the price drops. Is that okay, everyone? Do you need to own shares to buy a put? No, you don't need to. You don't need to own shares to buy a put. No, not at all. Okay. Okay, so the final thing that you can do. So we said buy a call option, sell a call option, buy a put option. Last one is to sell a put option. Okay. So as when you sell a put option, you collect money. Remember, when you sell options, you collect money, right? Okay. So I sell the option, sell a put, I collect money. But why do I get free money? Why I get free money? Because when I sell a put option, I'm obligated to buy 100 shares at the strike price that I locked in before the expiration date. So for me, I can tell you most of the time, in fact, 90% of the time, I sell put options every day. Okay, I repeat, every day, 90% of the time, I sell put options. Why do I sell put options every day? Because I keep collecting what? Premium. Yay, I collect premium, right? But by collecting the premium, what happened? I'm obligated to buy 100 shares at a certain strike price. And I don't mind doing that because these are very good companies that I don't mind buying. So by selling a put option, what happened? I'm getting paid, I'm getting paid free money to wait for the stock to drop to a cheap level to buy. Okay? So I'm going to give you some examples in a while. Okay? So far, are we okay? All right. Okay. So now let's apply this. Okay. This is an overview of what you've learned. So again, when you buy a call option, oops, sorry. Okay. One more time. When do you buy a call option? When you are very bullish. Okay. When you think the stock price will go up a lot, you buy a call option. Got it? When you buy a put option, when you're very bearish. If you think the stock price will drop a lot, you buy a put option. The more the stock price drop, the more you make. This one, the more the stock price go up, the more you make. Can you see the opposite here? Okay. When do you sell a call option? When you already own 100 shares. When you already own the 100 shares, you sell a call option to get the premium. If the stock price goes up, you have got no risk if you own 100 shares, but you get the premium, right? You sell a put option when you don't mind buying 100 shares. And if the stock price goes up, you don't buy the shares, but you get the free premium. If the stock price goes down, you buy the shares, you're not afraid of this because good company, the price will rebound back later on. Okay, so we only do this on good companies. Okay. All right. So now I'm going to show you how to apply it to trade executions. Okay, before that, let me give you a few seconds to breathe. Okay, so far, is it okay? I'm just afraid some of you may be a bit lost if you have never learned options before. If you have not learned it before, you will definitely be lost. I don't blame you. But if you learn options before, then you should be able to follow me. Huh? Okay? Okay, very good. So let me show you a real example here, okay? So let me go to my charts and let's look at this stock. This is an ETF actually. It's an ETF. It's an ETF. You can trade ETF as well. Okay. So right now, can you tell me what stage is this? What stage are we in? Stage 1, 2, 3, or 4? Stage 2. Very good. This is called stage 2. Stage 2 uptrend, right? Okay. So you can see wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. And let's say you think that it's now going to bounce up, right? You think that, okay, it's going to bounce back up. This could be a potential trade, right? Okay, so you can see, let's say on Monday, when the market opens, if the price goes above this candle, for example, we could buy at 155.5. So this is our buy price. Okay? And then where do we put the stop loss? We put the stop loss below the swing low at 149.43. This is our stop loss. Okay? So what is the 1R?
Market data connection reestablished.
What is the 1R? 155 minus 149. The 1R is about $6. Can you see $6? Okay. And then we risk 1R to make 2R, which is $12. Our profit target at 167.64. So this is an example of a trade. Okay? This is an example of a trade. Now, again, how could you execute the trade? You can execute by trading stock or by using options. And I'm going to show you the different scenarios, okay? And you can see for yourself why options sometimes can be much better than trading the stock. So let me go to my drawing board. Okay, let's go to the drawing board. Okay. So the first thing we can do, the first option is to buy the stock. Buy the stock. Okay. Now let's assume that we have to buy 100 shares according to our position sizing. Let's make it simple, okay? So if you buy 100 shares, what is the capital that you need? What is the capital that you need in this case? Capital will be $155.50 times 100. Agree? You follow me? Do you agree? Everyone agree with that? Okay. Now, if the stock, okay, if it hits the profit target, how much do I make? I'll make $12.14 times 100, right? $12.14 times 100. All right, 1,200 profit. Now, what is my return on capital? My return on investment. You take 1,214 divide by 15,500. Okay, 1,214 divide by 15,500. So my return on capital is 7.8% return. Agree? Do we agree with that? 15,500 or 15,550, is it? Sorry. 15,550. Oh, okay, so my bad. 15,550. Okay. Hold on. 15,550. Okay. So about there, agree? Are we okay? Okay, good. So now what happens if we buy a call option? Okay, let's see. So the second thing we can do is instead of buying the stock, we buy the call option. Okay, so let's see how much would it cost to buy the call option. So I'm going to my trade tab here. Now, again, when you look at call options, you can see different expiry. Can you see? Expire in 6 days, 41 days, 97 days, 160, blah, 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 right? Now, bear in mind, when you buy a call option, the option loses value the fastest in the last 20 days. The last 20 to 20 days or so, it loses value the most. So you must always buy a call option that has got at least 30 to 40 days left of expiry. If not, it loses value very fast. Okay. So let's choose the one that expires in 41 days. This is the 21st of August expiry. So let's open it up. Okay. Okay. So can you see these are call options here? These are the different strike price. Can you see the different strike price here? Okay? Of course, you can use any expiration. You can choose 40 days, 100 days, 200 days, up to you. Okay, up to you. Huh? I'm just telling you that for this example, I'm going to use 41 days. Now, where was I? Yes. Next, I have to choose a strike price. So, what strike price do I choose? Again, different people use different strategies. To keep it simple, I'm going to choose a strike price that is near to the current market price. Near to the current market price. So, what's the closest to 154? What's the closest to 154? 0.46. I can either choose 154, 155, right? I can choose either one, right? Okay. So let's choose 155. Let's choose this one. So if I buy this, how much would it cost? It will cost $10.30, right? So I'm going to click here and you see what happens, you know? So I buy one contract. Remember, one contract is 100 shares. One contract is 100 shares. So I'm going to buy one contract of quantum stock, 155 strike price. And how much do I pay? What's the premium I pay? I pay a premium of $10.30 per share. Okay? $10.30 per share. Now, let's see what it looks like. Huh? Okay. So this is what it looks like. So let me orientate you a bit. So on the horizontal x-axis, this is the stock price. Can you see the stock price is here now? 155, right? So stock price can go up, stock price can go down. This is the profit and loss. This is zero. Anything above, profit. Anything below this is loss. Can you see that? Okay. Now, so how much does this cost us to buy this option? To buy this option, how much does it cost? It costs $10.30, right? $10.30 times 100 shares. So it costs 1030. So let's go and write that down. So in this case, our capital is what? $10.30 times 100 shares. 1030. Okay. So straight away, people say, oh, I love to buy call option because instead of 15,000, I only need 1,000, right? With $1,000, I control the same 100 shares, right? So that gives you a lot of leverage in a way, right? Okay, so that's why people like to use call option. Now, what is the profit I will get if it hits the profit target? Again, what's the profit target? The profit target is here, right? This is the profit target here. Can you see the profit target here? Okay. Now, can you see this purple line? Can you see the purple line? The purple line is your profit and loss on this date today, on the 12th of July. Okay. The green line is your profit and loss on the expiration date, which is 21st August in 40 days. So if you buy the stock now, okay, buy the option now, and straight away it goes up. Let's say in one day it goes up to the profit target. How much money do you make? If I put my mouse here, can you tell me what is in the box here? See the purple number. Tell me the purple number. How much do I make? 682. Do you see 682? Okay. I'll make $682. Okay. If the price goes up straight away. But in reality, do you think the price will go up straight away in one day? Do you think so? Of course not, right? It'll take some time for the price to go up, right? So let's assume that it will take about 20 days for the stock to go up. 20 days, right? So can you see now is the 12th of July? Can you see now is the 12th of July? Okay. Now, notice what happens when I move it forward from 12 July, it becomes 13 July, becomes 14. Now, notice what is happening to the purple line. Can you see what is happening to the purple line as I move the date forward? What is happening to the purple line? Can you see the purple line is dropping? Can you see it's dropping? Why is it dropping? Because the option is losing value. Remember that options, every day they are losing time value. They lose value, lose value, lose value because the time is getting shorter. Okay. So let's assume that in 20 days, on the 1st of August, then it hits the profit target. Your profit will be less. So the longer it takes to hit the target, the less profit you make because the option loses value. Okay. So let's say after 20 days, it hits the profit target. Now tell me what is the profit now. Now the profit is 459, right? It's lower, right? Okay. So that is a bit more realistic. So let's put 459. So the profit is 459. So what is my return on capital? 459 divided by 1030 is 44% return. So some people say, wow, this is fantastic because with the call option, what happened? Number one, I use much less money. Number two, instead of 7% return, I get 44% return. Wow, that's fantastic, right? But what's the catch? What is the catch with the call option? The catch is that there is an expiry date. And if the price doesn't go up enough, what happens? All right. So let's imagine if the price stays here. Okay, hold on. Let me put this. If the price stays at the current price or the price goes down, what happens? And the option keeps losing value. You see? By the expiration date, what happens? You will lose your entire premium. You will lose your entire premium. Can you see what I'm saying here? So let me write this down. So the risk is if the stock price, if the price doesn't go up, if the price does not go up fast enough or doesn't go up enough to cover the cost, okay, you can lose what? Your entire premium. Is that clear? But if you buy the stock and the price doesn't go up, do you lose the 15,000? You don't lose the 15,000. Okay. So that is the reason why I do not buy call options. Okay, I repeat, I do not buy call options because of this reason. Because if the price doesn't go up fast enough or it doesn't go up significantly enough, I will lose my premium. Okay, so this is not my preferred way of using options. So I'm going to show you my preferred way. So my preferred way of using options is a technique called the bullish synthetic spread. Okay, so why do I like this technique? Because, okay, let me explain this technique. So the bullish synthetic spread is a technique where I will buy a call option, but at the same time sell a put option simultaneously, both at the same strike price and the same expiration date. Why? Why do I do this? Okay, listen very carefully. Remember, when I buy a call option, I have to pay money, right? I have to pay money to buy the call option. When I sell the call option, what happens? Sorry, when I sell the put option, what happens? I will collect money. So by selling the put option, the money I collect will pay for the call option. So it would be cancelled off. So in the end, what is the cost of my trade? What is the cost that I pay? The cost is near zero. It's negligible cost. So I'm getting in a way, a free trade. You follow what I'm saying? I'm getting a free trade. Okay. So let me show you now how I would execute this. Huh? So this is the method that I use regularly. Okay. I don't buy call options. I use this one instead. Okay. Okay. So where was I? Let me go to trade. Now, first of all, when you buy 100 shares, right? Okay, sorry, let me delete this. Okay. So again, what I'm going to do is this. I'm going to buy a call option at, I'm going to buy a call option and sell a put option. When I buy a call option, I have to pay $10.30, right? When I sell a put option, I collect, okay, I'll collect about $8.80. Okay, so it doesn't offset completely. It offsets a lot of it. Okay, so let me show you. I buy this and I sell this. So net net, I am paying only
Market
30
data
cents.
connection lost.
I'm only paying 30 cents. Can you see that, guys?
Market data connection reestablished.
Okay, I'm only paying 30 cents. Now, what does the trade look like? Let me show you what the trade looks like. This is what the trade looks like. Let me go back to the 12th of July. Okay, so notice what the trade looks like. The trade now becomes one straight line. Okay, so in other words, listen very carefully, right? When you buy a call and you sell a put at the same strike price, it is equivalent to buying 100 shares. It is, I repeat, buying a call and selling a put at the same strike price, it is equivalent, it's exactly the same as owning 100 shares. It's exactly the same. The profit and loss is exactly the same, no difference. The advantage of this is instead of using a lot of capital, you only use 1/4 of this capital. So this is more capital efficient. Understand? So in this case, you can see as time passes, I don't lose value. There's no more time decay. Now, see what happens. If the stock price goes up, how much do I make? Can you see this purple line for me? Oh, I forgot to do something first. I forgot to show you how much is the buying power. Okay. Now, if I send the trade in, notice the buying power is 4,000. What does this mean? This means when you enter this trade, the cost is only 30 cents. Yes, that's the cost. But the broker requires 4,000 in collateral. All right. We call this the collateral, the buying power used. So the capital is 4,000. Okay. So let me write this down here. So in this case, the capital is 4,000. And what is the profit I will make? What is the profit I'll make if it goes to my profit target? Let's go to the trade tab. Okay, so I'm going to put it here. If it goes here, now again, let's say it takes 20 days, right? So let's move this to this 1st of August. It takes 20 days. Okay, now tell me what is in a box. How much do I make? The purple. 1263. Very good. Okay, so and what's my return on capital? 1263 divided by 4,000. So it's about 31%. So why is this my favorite strategy? Because number one, do I get a higher return than this? Yes. At the same time, if the price doesn't go up, the price stays where it is, I don't lose money. Can you see? Can you see that in this case, if the price stays here, I don't lose money. I still break even because there's no time decay. Now, of course, if the price goes down, of course, I can also lose money, right? Which is the same as owning 100 shares. So if the price goes down to my stop loss, I must close the trade. I must close the trade. So of course, I will lose money if I close the trade. And how much do I lose? I will lose the 1 hour. So it's the same risk to reward, except if the price doesn't move, I don't lose money as compared to the call option. Okay, so does that answer your question, Iris? What is the risk? The risk is that if the price goes down, I close the trade, I will lose the 1 hour. Okay? You don't have to buy the shares. Now, remember, if the price drops to 149, you have to cut loss. You have to close the bullish synthetic, which means you have to sell the call and buy back the put to close, and you will lose the 1 hour, which is the same as buying 100 shares. Okay? So let me show you again a lot of examples which I've shared. Yeah. So by the way, I share all my option trades with my UIP subscribers. Those of you who are in UIP, every day I'm trading options. You get all my trades, my buy, my sell, and you can see all my profit, all my loss. It's all totally transparent, right? So example, you can see I entered a bullish synthetic on Lockheed Martin, buy 450 call, sell 450 put, and in this trade, I collected a $670 credit. That means when I enter the trade, not only do I not pay money, I get paid money to enter the trade. I get a 670 credit to enter the trade. That's why I love it, because I get paid money to enter the trade. Okay. And my stop loss is there, my profit target is there. When it hit my profit target, I close the trade, right, for $5,000 profit. And this is the more recent one. This was Adobe. I just entered on the 24th of June. Okay. So 24th of June, you can see I entered Adobe. I sent this trade alert, right? I entered a bullish synthetic spread on Adobe, buy 200 call, sell 200 put, 21st August expiry for a 1 cent credit. So again, I entered a trade for a credit. That means I didn't pay money. I get paid money to enter the trade, right? And this was the trade notification, and I just closed it. I just closed it on the 8th of July, which was 3 days ago. I closed it for $2,900 profit. You can see my return is, what's my return? 300,000% return. Why? Because my cost was zero. Okay, so this is a really, really cool technique. Again, if you're a bit confused, don't worry. It's the first time. I don't expect you to understand everything. All right. That's why in the mentorship program, we handhold you step by step. Once you get it, once you understand it, it's so powerful. Okay. It's so powerful. Now, what I showed you just now is called a directional strategy. So what is directional strategy? It means you only make money if the price goes up, right? If the price doesn't go up, you don't make money. But the great thing about options is this: can you make money if the price doesn't go up? If the price doesn't go up? Can you make money if the price goes nowhere? Yes, there are many strategies that I use which are called non-directional strategies. And I'm going to show you a few right now. So these are my favorite: selling cash secured puts, which I do every day. In fact, almost every day I'm doing this. Number 2, selling bull put spreads. Number 3, jade lizards. And number 4, iron condors. Okay, and later Bang Fan Van, who will come after me, will show you even more ideas on what he does. So let me show you this technique called selling cash secured puts, which is the one which I use almost every day. Okay. So far, can you follow everyone? Can I continue? Okay. Now, selling cash secured puts, what is the main objective of this technique? The main objective is I get paid every day to wait for the stock to drop to a discount that I don't mind owning. I get paid to wait. I get paid to wait. All right. Okay. So let me give you a recent example, which I just did. Okay. So I entered the trade on 22nd of June, which is quite recently. All right. So first of all, only do this on very good companies, the top 1%. Is Amazon a very good company? Is it a top 1% company? Yes. Okay. So number one, it must be a very good company and it must be undervalued. So using Stock Oracle, you can check the intrinsic value of Amazon is about $233. Okay, that's the intrinsic value. So only do this when the price is near or below the intrinsic value. Very important. Don't do it when it's overvalued. Huh? Okay. Now, then look at the price action. Wave up, wave down, wave up, wave down, wave up, wave down, wave up, broke down. Then went up again, wave up, wave down. Now, over here, the price dropped to a support level. This is called support level. And it hit the support level on 22nd June. And on that day, the price was $232. Okay. Now, if I wanted to, could I buy the stock here? Could I just buy the shares here at 232? Could I just buy the shares? Yes, I could. I could buy the shares, right? But if I wanted to get a bigger discount, what can I do? I can wait for it to go lower, right? Now, instead of waiting for it to go lower, why not get paid to wait? Why not get paid to wait for it to go lower? So that's what I did. So what I did on the 22nd of June is I sold the Amazon put option at the 225 strike price. Now, again, why do I sell a put option? Why do I sell a put option? To get money, right? To get premium. So I collected $5.70 premium by selling this put option. And by selling the put option, I collect $570 upfront, right? Money, free money for me, okay? And I'm obligated to what? I'm obligated to buy Amazon shares at 225, which I don't mind because Amazon, good company and undervalued, I don't mind buying 225. Okay. And this put I sold expires in 40 days. All right. And let me show you the actual trade. By the way, I have not closed the trade, it's still open. Huh? So let me show you. It's here. Can you see here? Can you see? I sold this Amazon put. I sold it at 570. Now the put is worth 314, so I already made $500. Okay. Eventually, when this goes to zero, I will make 569. All right. This is my other account here. Yeah, this account here. Okay. I'm doing it on two accounts. So Amazon, you see, I sold here, right here. So these are all the puts I've sold. These are all the puts I've sold. I've not closed it yet. These are all my open trades here. Okay. These are all my open trades here, right? This was the trade notification I gave to my UIP subscribers on the 22nd of June, where I sold the put option. Now, once I sell this put option, what are the different scenarios? Let me show you the different scenarios. So again, what is the Amazon price on that day? 232. Okay, this was the price that day. I sold the put at 225, below the current price, and I collected the premium. Okay. Now, scenario number one. Scenario number one is, let's say in 40 days, Amazon shares don't go below 225. They don't stay below 225. They stay above 225 by the expiration date. So Amazon shares go up, or they go sideways, or they can even go down. They can even go below 225, but before it expires, it stays above 225. If this happens, the put option will become worthless. And what happened? I will not end up buying the shares, but I keep the premium. I keep the premium. And I repeat the process every month. And I get about 2% return every month. 2%. If I get 2% every month, in a year is 24% return, collecting premium. Again, if you're a bit confused, don't worry. I'm going very fast. This is a very introductory webinar, but I just want you to get the gist of it. Okay, just get the gist of it. Yeah. Now, what if Amazon goes down? What if Amazon goes below 225 and stays below 225? Then I'm obligated to buy the shares at 225, which I don't mind because it's a good company, it's at a discount, right? And I already collected the premium, which is 570. So I buy at 225 less the premium I collected already. My net purchase price is 219, which is a very good discount. So either way, I win. If the price go up, price goes sideways, price go down a bit, I don't get the shares, I get free money, I win. Price goes down, I get the shares at a discount, I also win. It's a win-win. I cannot lose. I cannot lose. As long as I do this on very good companies that are undervalued, that I know over time will go up. Do not do this on lousy companies. Do not do this on overvalued companies. Do this only on good companies. Okay? Now, you may say, but Adam, what if there's a stock that is not a good stock, not a good company, but I want to do this? Can you still do it on risky companies? Yes, but
Market data connection.
you must use a technique called the bull put spread, which is, I'm going to show you next very quickly, right?
Market data connection lost. Market data connection reestablished.
I also did it on NASDAQ. You see 29th of June, right? I sold a cash secured put on NASDAQ at 74 strike price, 7 August expiry, collected 180 premium. You see this double bottom here? You see the double bottom pattern here? I sold the put at 74 strike. This was the trade alert I gave my subscribers. I sold it at 180. And what happened? In just 3 days, sorry, in 3 days, when the price bounced up, I closed the trade for $655 profit already. I made 50% of all the profit in 3 days. I closed the trade. So I don't always hold it to 40 days. If I can make most of the profit in 2 days, in 3 days, I close it, I close it, I close it. So that's how I roll my profits. Okay. And you can see, yeah, these are all the trades. I closed Microsoft at 85% of max profit, closed Fortinet, 95% of max profit, closed Google, 80% of max profit, closed Yum, 71% of max profit. So I don't always wait for the expiration. I close early. Once I have got normally 70 to 80% profit, I close early. Right? So again, if you look at my trades here, you can see on Monday, I will close this one. Can you see Meta? I sold it at $10.80. Now it dropped to 80 cents. I make 92% profit already. So this one on Monday, I'll close it. And the rest I can close by next week already. Okay. So you can see my students, they love this.
Market data connection reestablished.
Wait, give me a second. Where was that one? Yeah. These are my students. You can see this is Marie, right? She says, hi, Master Adam and Bang. By the way, Bang Fan Van, he is the grandmaster of options. Okay, I'm not the grandmaster. I'm just trader, all right? So I can tell you that Bang is the grandmaster, okay? So he'll be coming up later on and he'll teach you even more, okay? I am just his sidekick when it comes to options. He is the main guy, okay? So she said, hi, Master Bang and Adam. I've been trading for years, but I only knew single calls and puts. I was making a lot of money, then I lost almost all my profits. After that, I made more money and then lost it all again. It was just going around in circles. After I joined Piranha Profits in 2020, I studied so hard to master option strategies under Bang and Adam's guidance. I'm making consistent profits with confidence without stress. Now I can sleep through the night, and every day I'm so excited to trade and invest without any fear. This year alone, in 1 month, I'm up more than $35,000 profit. Okay. This is Veronica. Veronica from Singapore. She says, for all who are new to options trading, I'd like to assure you that you have made the right decision to join Piranha Profits. I'm also a total newbie to stock and options trading, as I had never invested in any stock or options before joining Piranha classes. I'd like to share my personal testimonial that the options trading lesson taught by Bang and Adam and YY truly works. Over the past 60 days, my realized profit is $9,180. This may look like a small profit to many senior traders, but to a brand new beginner like me who started in April this year, this is definitely a great start in my options trading journey. All right. And this is Tony, who just sent this in a few days ago. He said, big thanks to Adam and Bang for their fantastic and easy to understand options course. It supercharges my investment retirement account. I transformed to trade more rather than investing. It allows me to retire this year at 49 after many years of driving a taxi. And his results have been phenomenal. You can see that since he started in 2023, 2024, 2025, he has had consistent profits every single year. And he was driving a taxi for many years. I think for 20 years he drove a taxi. Now he's like building his retirement plan. This is Barryman. He said 2024 has been an incredible year of growth, learning in options trading with over 400,000 in close profits. Right, he made over 400,000 in that year when he joined. Now, some of you are asking, do I need a big account to trade options? Okay, the answer is not necessarily, because there are altogether 21 option strategies that you will learn. Out of the 21 strategies, I would say about 4 to 5 need to have bigger accounts. Okay, the rest don't need big accounts. That means you can trade with a $3,000 account or 4,000 or 5,000. But I would suggest when you trade options, a good size would be at least $3,000 to $5,000 capital. All right, for a small account. So if you have a small account, you cannot sell cash secured puts. Okay, that is only for relatively bigger accounts, like at least 50K, 100K. Okay, if you have a smaller account like 3K, 5K, then you have to use a bull put spread strategy. Now, I don't have time to go into detail, but to give you an idea, a bull put spread is one where we cannot just sell a put option. Because if you sell a put option, you're obligated to buy 100 shares, right? But if you say, I can't afford to buy 100 shares, then you cannot just sell a put option. You have to sell a put option and buy another put option to protect the first put option. It's like you sell insurance and buy reinsurance. So this is called a bull put spread. And this is good for smaller accounts who cannot buy 100 shares. who do not want to buy or cannot buy 100 shares. Okay. Now, I also use the bull put spread myself for stocks that I don't want to own. Like I think the stock may go up, but I don't want to own the shares because it may not be a great company. I will use the bull put spread. Now, again, why do I use a bull put spread instead of just buying the stock? Why don't I just buy the stock? Because if I buy the stock, I only make money if the price goes up, right? If the price doesn't go up, I don't make money on the stock. But with a bull put spread, whether the stock price goes up, the stock price goes sideways, or the stock price goes down, in all directions, I will make money. As long as it stays above the strike price of the first put. Of course, if it drops below this, yes, of course I can lose money. There's no such thing as sure win. There's always losing trade. Okay? But this increases my profit zone. Go up, I make money. Sideways, I make money. Go down slightly, I also make money. As long as it doesn't go below this put strike. Okay? So that's why the bull put spread gives about 70+% win rate, which is higher than the 50-60% win rate of stock trading. Okay, because of the ability to increase the profit zone. Yeah. Again, I can't go through this in detail, but it's taught in the options mentorship course. Okay. So, for example, this is one of our students. He said, "This is my options trading account. It's a small account. I started with 2,000 in January and later added 12K in February. Now the profit has built it to 50K. All investors need to understand options. It helps to minimize risk and maximize your return. If you don't understand options, it's like going to war with knife and spear." Right? And you can see, his total realized profit 40,000 US on that first year he started, right? And Robin, I just got this email yesterday. She said, "Adam, wanted to share a milestone and say thank you. I joined Piranha Profits in 2022, starting with the Wealth Academy course and started selling options in July 2024. Cash secured put first and then bull put spread using your system. As of this week, 97,000 in realized profits in 2 years with 85% win rate, alongside a stock portfolio built on your intrinsic value framework that's returned 32% per year since 2022.
Market data connection lost.
The biggest lessons weren't the wins. My worst months taught me why your rules on position sizing and cutting losses exist. Still learning that discipline every week from the Bahamas." Yeah, she's living in the Bahamas. Wow, sounds so nice. Anyway, so again, in the options program, you will learn altogether 21 different option strategies. Why so many? Because you use different strategies under different market scenarios. Okay. So when the market is very bullish, stage 2, right? Stage 2, very bullish. Okay. You can use bull put spread extreme, cash secured puts, bullish synthetic, bull call spread. On a stage 4, when it's downtrend, you can use bear call spread, bearish synthetic, bear put spread. If it's stage 1, going sideways, you can use diagonal spreads, calendar spreads, iron condors, selling covered calls. And for special events like earnings, you can use like the earnings probability spread. So options makes it very flexible. Okay. You can trade options on stocks, on ETFs, on futures like commodities,
reestablished,
on oil, on gold, and on Forex. Anyone remembers Brexit, by the way? Do you guys remember Brexit? I made quite a lot of money on Brexit by trading options on the pound dollar futures, right? On trading options on the pound dollar futures, right? So very useful. So again, why use options? It allows you to profit under different market conditions. It can lower your capital, boost your returns, and increase your win rates. So for investors, for long-term investors, you can use options in three ways: selling covered calls, selling cash secured puts, and protecting your portfolio during bear markets. Again, all this will be covered in detail. For short-term traders, you can use options for directional trading and for non-directional trading and for event-based trading. So like I said, it's a very powerful tool that is extremely flexible. These are my accounts, as you can see. Now, last year, as you know, I've got two accounts over here, right? This is my first account. This account is about 6.4 million. And this account is 7 million, right? So I'm trading these two accounts primarily. And what's my option profits? Okay. So last year, my first account, I made $176,000 net profit. You can see my total, when I sell options, I collected 759,000 US dollars. When I buy back the options, I pay 582,000 US. So net, I made 176,000 US for my first account. My second account, I made 164,000 US. So total profits last year is 341,000 US. Okay. That is for 2025. 2024, sorry, first account I made 99K, second account made 93K, total profits in 2024 was 192,000. Okay. 2022. Now, why do I show you 2022? How do you know what happened? What happened in 2022? What happened in 2022? Was it a bull market or bear market? It was a bear market. Okay.
Market data.
Now, what happened during the market, the bear market? Total options I sold 1.1
Market data
1 million.
Re-established.
Options I bought back to close the position 867,000. My net profit was a quarter million in 2022. Right? So it doesn't mean that only in a bull market I can make money. Bear market, collapse, I still make a quarter million in options. That's about flexibility. All right. This is Tony. I already showed you Tony already, right? Yeah, I showed you Tony already. This is Cheryl. I don't know why, for some reason,
market data
most of my option traders are all what? Most of my top option traders, these are all what? Are all women. Are all ladies. I don't know why. Very strange one. For some reason, all the ladies love options. I don't know why. For a very strange reason. This is Cheryl. She says, Dear Bang, I'm from your first batch of students in 2017 when our monthly gatherings were still held at Cuppage Road. My options journey started off shaky with inconsistent ups and downs that proved unsustainable. At one point, there was a significant downturn wipe out half my portfolio. A truly painful experience. It was so discouraging that I took 2 years off from all my investing activities. After COVID, I found the resolve to return and master the knowledge, discipline, and psychology required to be profitable. Rewatch all your videos, blah, 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 blah. Cut the long story short, now she's consistently profitable. I took a couple of years, but this slow-witted student is so proud to share my 2024 results, 60.7% return across my trades with a win rate of 76%. All right. This is Suren. Suren achieved 36% return as well, 101% return on my investment since I subscribed to the investing. Right. So I always say that, I've got two daughters, by the way. One is in NTU, second year. My elder one just graduated looking for a job. And I'm really proud of them that, they graduated, but they are now investing, they're now trading. And the reason is because I say that In the old days, what did our parents tell us? Back in the 80s, 70s, study hard, get good results, find a good job in a good company, and they'll take care of you forever, right? And the longer you stay, the more you are worth, and the more they'll take care of you. Does that exist anymore? Unfortunately, it doesn't exist anymore. Nowadays, you can get a top degree from a top university, you can get a master's degree, and it's expensive toilet paper. Seriously, it is expensive toilet paper. I told my two children, I say, your degree, very good, it is expensive toilet paper because it cannot guarantee you an income for the rest of your life. And nowadays, the longer you stay, the more you are worth less because they can replace you with someone younger, cheaper, faster, and now replace you with AI. Okay, so I told them, you still must get a job, you must still earn an income, but make sure the income you earn, you keep investing it and you learn how to trade the financial markets. Because the day you cannot work anymore, the day you don't want to work anymore, the day they kick you out, no worries. You're able to sustain your lifestyle forever if you master trading, if you master investing. So to me, learning to trade is not a nice to have. It's not a good to have. It is a must have. It is a must have in today's economy because no one will look after you. No one would look after you except yourself. And trading is the only skill, investing is the only skill that can guarantee you an income for the rest of your life. Okay, so let me introduce to you the ultimate income boosting roadmap for traders and investors. Now, options, like I said, it's like riding a bicycle or even driving a car. Yes, at the early stage, it takes effort, it takes time. Let me put it this way. If options were so simple, everyone would master it. Everyone would make all the money, right? But in a way, I like it that options are difficult to learn at first. I like it. Why? Because it is difficult to learn at first. That's why very few people can make money from it. That is what gives us an edge, an advantage over everyone else. That's why I like it. Okay? But the way Bang and I teach, we make it as simple as possible to understand. So that if you are a newbie, you got zero financial background, you have got zero market background, you can learn this. Okay? So we created this thing called the Options Wave Rider Mentorship System. And let me explain how this works. So first of all, who are your main trainers? Now, the guy leading all the option courses is my grandmaster, okay? He's the Yoda, okay? I'm Luke Skywalker, he's Yoda, right? Bang Famban. And Bang is one of the best option traders in the world.
Connection lost.
Okay, I challenge you to find someone who's as good as him.
Market
It's
data
very, very difficult, right?
Re-established.
And many of the strategies that he teaches, you can't find anywhere because some of them he invented himself. In fact, he loves to create new strategies that no one has heard of, right? And he rigorously tests these strategies. And he makes consistent profits from options. In fact, he makes more than me in options because he focuses on options 100%. I don't. I focus on stocks, investing. To me, options are like a side dish, but to him, options is the only thing that he does. All right. So you can see in the last 1 year, he made 800,000 US across all his option accounts. And then you also have got Chu Yanyi, YY. And for the last 7 years, he generated 238% return in profits from options. And what makes him special and people love is that he approaches it from a smaller account perspective. Because Bang and Alson and myself, we manage multi-million dollar accounts. Okay, YY is not a multi-million dollar account because he started a lot later, right? So he's got a relatively small account. And so many of our newer students with small accounts can love to relate to him. And he also does one-on-one coaching as well, right? So if you're interested in one-on-one coaching, you can look for YY. He's got rave reviews, but he's got a very packed waiting list, right? Because he's very, very popular for one-on-one mentorship. Okay, so for the options program, first, you start by learning all the courses. Okay. There are two courses. Level 1 called Iron Shell. Level 2 called Iron Striker. Level 1, Level 2, total 21 strategies. Now, all these are pre-recorded. They are pre-recorded lessons that you can watch anytime, anywhere, and they are updated regularly. In fact, we just recently updated a lot of examples. Okay? So you can learn at your own pace, learn anytime, learn anywhere, like watching Netflix. What is covered? So in level 1, first you learn all the option basics. What's a call? What's a put? How to set up the charting software? How to use the option tools I've been using. And then you will learn how to use options for investing, like selling cash secured puts and selling covered calls. And then you will learn more aggressive strategies like bull call spread and bear put spread. You also learn moderately bullish and bearish strategies like the bull put spread and the bear call spread. And you learn tools of the trade, basics of technical analysis, how to handle options assignment, and you also learn how to hedge your portfolio with puts during a bear market. So in a bear market, how do you protect your portfolio? That's all covered in level 1. Now, level 2 is called the Iron Striker. Again, all these are pre-recorded videos. Watch anytime, watch anywhere at your own pace. Okay? So you learn things like Jade Lizard, which is one of my favorites, crouching bull strategy, bull put spread extreme, diagonal spread, bull bound collar, DS hammer, C to D strategy. This one, this one, this one, this one, you cannot find anywhere. These three were invented by Bang. This one invented by me. Yay, I invented one. I'm so happy, right? Now, market neutral strategies, Iron Condor, calendar spread. Okay. And then synthetic long and short, which is what I taught you today, synthetic long. Bull Bang, invented by Bang. Earnings probability spread for trading earnings on stocks. And then there's a lot of training on trading psychology as well. Trading psychology, risk management, and how to build a profitable options trading business. If you do not know, Bang was actually with Procter and Gamble for 26 years. And he could actually have retired about 6 years ago already, but he stayed on because he loved his job. But now, because he is traveling a lot with his family, he wants to spend more time with his family, so he has uh, resigned from Procter and Gamble, and he's trading full time and making about $1 million every year or more. He's living the life, right? So great guy to learn from. Okay. And options trade management, how to choose the right broker and trading platform, all will be covered. Yeah. So again, you can read all our testimonials, all our students who have been with us for so many years, right? Now, over 10 years. This Alexander, he said, I would like to take this opportunity to thank Adam and Bang for your exceptional investment and trading advice. By incorporating options trading to my strategy, I have not only recovered all my previous losses, including cost and subscription fees, but also achieved a decent profit. My investment and trading journey would never have been as successful without your constant guidance and invaluable lessons. Here is my portfolio performance year to date, 300%, which is really, really impressive, right? Aaron says, thank you, Adam and Bang, for the training. I've done most of your courses starting about 3.5 years ago. This has been life changing. I now have a monthly income from options trading, right? It's got $1 million account. And it goes on, right? I don't want to spend too much time on this, but it's all there. Yeah. Now, how many of you have got some of these common concerns? I'm a total newbie. But what if I fail? Or this is too complex for me. Oh, call and put. Oh my God. All right. I'm a slow learner. I'm afraid to start. What if I made the wrong trade? Remember I told you about this guy called YY, who is one of our top traders now, and he does one-on-one mentorship. He started learning options about 9 years ago. Okay. And his background is in, if I'm not wrong, history. He studied history in NUS. All right. So he's got no finance background. Okay. And when he first learned it, I can tell you that, okay, I can say it lah, okay. He's one of my most stupid students, right? When he first started, he was like, he really don't understand, right? It's like normally people, you tell them 10 times, they understand. You tell him 10 times, he still don't understand, all right? But today, he's one of the top option traders. Okay. So I said, if YY can do it, okay, if YY can do it, anyone can do it. All right. So that's what I can tell you, all right? So it can be done, but one reason why he managed to succeed in the end was he didn't give up. He's very hardworking. All right. He's very hardworking. He practices it, he follows it, and that's why he really made it. And so did many of our students, right? So this is a system to guide you through the entire process. Okay. So enjoy 1 full year of online mentorship from Bang, who again is our main trainer, YY, as well as myself, and all the option coaches that we have in our community. Now, besides the lessons that are pre-recorded, which I showed you, all the lessons, right? These are live lessons, live on Zoom, okay? So the first is the onboarding workshop for beginners. So this is held every 2 months. You can attend it every 2 months if you like, okay? So for this onboarding workshop live, you'll learn how to set up your trading account, how to place your first order, how to use our tools, and more to get started. And then you also have monthly strategy deep dive sessions with Bang or one of our trading coaches. Again, this is live every month where we recap the lessons you've learned in the courses. You see how the strategy is applied, detailed case studies, and latest market examples. Again, these are live when the market is open, right? And then the monthly e-gathering and live trade hunt with Bang. So every month, Bang will do live trade hunt, where when the market is open, you will see how he hunts for trades, how he decides which technique to use, how he enters, how he exits, how he take profit, how he cut loss. This is done every month, where you can learn his thought process and how he manages his trades. And you can send in your trade ideas and have the chance for him to trade your ideas as well. Okay. Then all our courses, as you know, come with the Discord chat group, where you'll be in the Discord chat group with Bang, with YY, with the coaches, myself, and that's when you can discuss your trade ideas. Hey, I got this idea for a trade. What do you guys think? And you can ask questions on the course. I don't understand this. What does this mean? And we will also give you timely market updates, right? And every quarter, I will do a trading psychology session with you guys as well. This is a live class, live trading psychology sessions. Okay, so what is the tuition fee for the mentorship? Now, the courses where all the lessons are taught, this is lifetime on demand. So lifetime means you can watch until you die. Die already can give your children, right? Use the same password, but don't tell us you die lah. So we don't know, okay? So again, the courses are lifetime access, okay? No expiry date, lifetime access, 21 powerful option tactics and case studies, and option strategy quick reference guides. Now, the mentorship, which is the live one, okay, that is a 1 year access, okay, where you get the monthly e-gathering and live trade hunt. You get the monthly strategy deep dive webinars. You get the option traders discussion group. You've got the quarterly trading psychology class and the onboarding workshop. This is for 1 year. This is for 1 year. This one is forever. So the normal tuition fee for the options wave rider is 3,497 Singapore dollars. 3,497 Singapore dollars. And I can tell you nowhere else out there can you get this value. Can you get all these strategies, all this mentorship for this price? No way you can get. No way. All right. Whoever can offer this at lower, I can tell you they teach rubbish. They don't have our track record or our students' track record. No way. All right. Not to sound arrogant, but it's true. Okay. So if you want to enroll now, which you should enroll now, you get 30% off. Okay. So 30% off to enroll now, that's only 2,447 Singapore dollars. That is roughly 1,882 US dollars for the entire mentorship system and lifetime access to all our course materials. Lifetime access. Okay. So when you enroll now, you will get extra 2 months mentorship. If you enroll later, it's 1 year. Enroll now, total 14 months mentorship. So extra 2 months. And you receive your logins instantly. Now, after 14 months, if you say, Adam, if I want to renew my mentorship, can I? Yeah, you can. You can renew a second year at 1,002 if you want to, but it's not necessary because within 14 months, you will be very familiar with everything, right? But remember, the courses are lifetime. There's no expiry for the courses. Again, there are taxes if applicable for your countries. Yeah, bear in mind that. Yeah. And again, you can see these are all our students with all their track records. I joined the Wave Rider class on 1st of August and placing a few option trades. The course fees have been fully recovered, posting my actual P&L to motivate other people. All right. Now, what if I want to stay consistently updated on the options market outlook without spending hours researching? Now, as you guys know, I've got the UIP from yesterday. UIP is where you watch me invest every day, right? You watch how I manage the market every day. Now, Bang has also his version called OTP. OTP is called the Option Tactics Playbook. So this OTP is where you can watch him trade every day. Every day he trades, every trade he makes, every entry, exit, profit, loss, everything he will track it for the OTP playbook. So this is basically for people who want to follow him very, very closely. Okay. So for the OTP, you get monthly updates and OTP trade reviews. And again, you get all his trades every day. You get notified of all his entries, exits, and position adjustments. Again, we are not giving financial advice. We're not telling you to buy or sell. We are showing you how we trade, how we invest every day. Because it's like a apprenticeship. Because when you are, it's like me as a chef, you want to learn how to cook, right? It's like you come to my kitchen, you come to my restaurant, you watch how I cook every day for 1 year. And you watch how I cook every day, every single dish, you get very, very familiar, right? So these are all his trades every day that he will explain why I enter the trade, how I adjust the trade, how I take profit, how I cut loss, blah, blah, blah. It's all that, okay? This is John says, Dear Bang, I just renewed my OTP subscription. Last year, you opened my eyes on how to generate positive theta on long trades that usually eat up my time value. Amazing. I love your approach on entering trades when stochastics is sloping up and coming off the oversold region. Having traded options for 3 to 4 years, I now cherry pick the trades I like from the many that you put on. And I usually stay away from jade lizards, for example, but I like jade lizards, very funny, right? According to my trade log, my account is now 45 to 50K profit from OTP. All right, sorry, I made 1K, sorry, I made 11,000 profit on my 45 to 50K account, sorry, right? Okay, now, if you want to get both the Options Wave Rider mentorship plus the OTP, both together, we have a special package for you guys, okay? So again, what's the special package? The special. My mouth is not working today, right? So it's called the Ultimate Options Bundle. For the Ultimate Options Bundle, you will get the courses, which again are lifetime. You get the 1 year online mentorship, which is 14 months. Okay. Plus, you get the OTP, which is a 1 year access. If you want everything, usually is 6,794 Singapore dollars. But for this current promotional event, you get it at 35% off, which is only 4,410 Singapore dollars. So that's about 3,392 US dollars. And if you enroll now, when you enroll now, you get extra 2 months of the mentorship, so total 14 months. And you get instant options wave rider access. Now, bear in mind that the OTP for you starts on the 1st of September. Okay, I repeat. This options mentorship starts straight away. You get the courses straight away, you learn. The OTP, where you follow Bang, what he trades, you see what he trades, that starts on the 1st of September. Why do you not start this immediately? Why? Why do you not start this immediately? Because if you get this immediately, you'll be totally lost. You don't know what he'll be doing. You have no idea what he's doing every day because you have not learned his techniques. You have not learned the strategies. You'll be totally lost and you'll be wasting your money. So that is why we only let people get into the OTP on the 1st of September so that we give you enough time to learn all the courses, all the lessons. Right? Yeah. So that is the reason why. Got it? Now, some people say, can I take the OTP without the options wave rider mentorship? Yes, you can if you want to. You can if you want to, but I'm telling you that unless you already have a very strong options background, you'll be lost watching him every day because you have got no idea what he's doing until you actually take the course. Got it? It's like if you have never learned cooking and I put you in a kitchen with Gordon Ramsay, you have no idea what he's doing, okay? Because you have not learned the fundamentals of cooking, okay? So again, you have two choices right now. You can take the Ultimate Options Bundle, which is the Options Wave Rider Mentorship, which is the mentorship course, plus the OTP Option Tactics Playbook. Total is 4,410 Singapore dollars. Scan the QR code on the right to enroll right now. That's about 3,392 US dollars. Or you can take just the Options Wave Rider Mentorship, and that is at 2,447 Singapore dollars or about 1,882 US dollars. Yeah, so again, scan the QR code here to get either one. All right, so go ahead and take it while right now we're having all these special bonuses for you guys. I'll give you guys a few minutes to enroll, and then in a short while, I'll share with you even more examples, okay? Oops. Oh, I forgot to show you some other things. Give me a second. Huh? Oh, sorry. There's an additional bonus for you guys. I forgot to show you. Okay, let me show you this additional bonus, right? Now, so again, the enrollment bonus now, when you enroll now, for the options Wave Rider buyers, you get extra 2 months access to options Wave Rider mentorship. So again, 14 months. Remember that. And for the ultimate option bundle buyers, you get free extra 2 months Wave Rider mentorship, that's 14 months, and free additional 2 months to OTP 14 months. So total is 14 months. Yeah, remember that is the special bonus only for enrollment now. Yeah, so scan the QR code to grab access, and in a short while, I will share with you even more examples. Yeah, before Bang Fan comes on in a couple of minutes, and you have to attend his webinar as well. He's the Grandmaster, and he will share with you some very powerful techniques that he has been using. Oh, sorry, it's blocking, is it? Okay, let me unblock it. My apologies. All right. Okay, can you see the QR code right now? Yeah. So you can see the QR code, right? You can scan the QR code or click on the link so that you can subscribe to the Options Tactics Playbook and the Options Wave Rider program. I'll give you a couple of minutes, and then I'll share with you some more examples. And I'll also invite Nazri, who come out and share with you some Q&A on the course itself. Yeah. Okay, so I'm going to pass the time to Nazri, who is the head of our customer service, and he'll come in and he will answer many of the questions that you have in enrolling in the options Wave Rider and OTP. So Nazri, if you're there, you can take over and you can help to answer many of the questions that are now coming in with regards to that.
Okay, hello. Hello everyone, can you guys hear me? If you guys can hear me, can put in yes please in the chat. So to ensure everything's all good. Okay. So I think first and foremost, I would like to actually, thank everyone for actually coming down to actually witness Adam's webinar. I think definitely what a session. I think packed with practical options insights. So I think before we move into Bang's session next, I'm actually seeing a lot of admin questions coming in, like things like what's included in the mentorship, how the access works, and what happens once you subscribe. So stay in the room. Let me run through the key admin questions now so everything is clear before we continue with Bang's session, yeah? So if you have any question, just feel free to type in the Q&A tab. Okay, let me share my screen first to make sure everything's okay. Give me a moment. Okay. Okay, so question from Ethan. What exactly will I get when I join the Options Wave Rider Mentorship? I think he's referring to the one at the bottom here. Or the Ultimate Options Bundle, which is the best value. Okay, so firstly, when you join the Options Wave Rider Mentorship, I'll go through the Options Wave Rider Mentorship first, which is at the bottom. You'll be getting both the education and the live coaching you need to trade confidently. So first, you will get lifetime access to our full options level 1 Iron Shell and level 2 Iron Striker courses, but over 80 hours of structured lessons that take you from fundamentals to advanced strategies. And then for the next 14 months, I'll say 14 because if you were to subscribe today for the Options Mentorship, Options with Rider Mentorship, you'll get an additional 2 more months. So there is actually 14 months in total instead of 12. And then you get all the live mentorship touch points. The touch points that Adam actually mentioned earlier, which is the live onboarding workshop, which is held every 2 months, the live monthly strategy deep dives with Bang, the live monthly e-gathering or trade hunt with Bang, quarterly trading psychology classes with Adam, and full access to the options traders discussion group for daily support on Discord. So all live sessions are listed inside your Wave Rider portal. So once you actually purchase or subscribe the Options Wave Rider mentorship, you'll have access to our portal where all the schedule for all these live session for the next 14 months will be inserted there. So basically it's a calendar where you can actually see. Later I'll just go through with you the portal itself. And if you can't make it for the live session, as I mentioned previously, don't worry. Everything is recorded and uploaded to the recordings as well. So we'll announce it on Discord once the replay is ready. Yeah. Let me see. Okay. So if you're getting the ultimate options bundle, which is the one on top here, which is the best value, then you get everything in Wave Rider that I mentioned, which includes the live access to options, Iron Shell and Iron Striker, and 1 year access to all these live session here. On top of that, you'll get 14 months of options tactics playbook subscription. Like what Adam mentioned, Bang has his own version of the UIP where he will actually, that includes all these real-time trade notifications, his access to the OTP trading logs, the OTP trades watch list, live monthly webinar by Bang, and the OTP discussion channel. Okay. Again, you'll be invited into the OTP webinars via email and Discord if you actually purchase the Ultimate Options bundle. Then and all the reports and replays will be uploaded to a portal. So not to worry again, for those who missed out on this live session, the session will be recorded. Okay. So again, I repeat in short, for Options Wave Rider mentorship, you'll have lifetime access to Options Iron Shell plus Iron Striker. On top of that, 14 months access to the mentorship itself, which is the live hand-holding session, where there will be onboarding workshops for beginners, monthly strategy deep dive session, monthly e-gathering, plus live trade hunt with Bang Fam Fan, the options traders discussion group on Discord, and the quarterly trading psychology class with Adam Koo. Okay, and if you purchase the best value, which is the ultimate options bundle, you'll get what I mentioned previously on the Options Wave Rider mentorship. On top of that, 14 months access, basically 12 plus 2 months if you sign up today, bonus 2 months, 14 months access to OTP discussion, the OTP playbook. So it's basically a UIP version of Bang's where you have access to the real-time trade notifications by Bang, the OTP trading logs, OTP trades watch list, live monthly webinar by Bang, and the OTP discussion channel. Okay, so for those who wish to subscribe now and also actually get the bonuses that is specially for today and also for the event, please scan the QR code right here. For the top one will be the Ultimate Options Bundle. The Options Wave Rider will be at the bottom one. Okay. Okay, let me see if there's any questions that I can attend to. If I sign up now, how soon can I access the mentorship? So once your payment goes through, be it for both all Ultimate Options Bundle or the Options Wave Rider, you receive an onboarding email from us with clear step-by-step instructions on how to access everything. That same email also includes the steps to join our private Options Wave Rider Discord community where you can connect with other options traders and mentors. So everything you need is within that email itself. If you don't see it within 10 minutes, check your promotions or spam folder as per usual. And if it's not there, just email us at support@planetprofits.com and our team will resend it straight away. Okay? Okay, let me show you what will you see if you actually enroll to either one of these courses. I think let me start with those who purchase the Options Wave Rider mentorship. Okay, just the mentorship. So let me change my tab. Okay, so if you purchase the Options Wave Rider subscription, you will receive an email, a similar email to what I'm showing right here, the top one, which is welcome to the Options Wave Rider subscription. And then once you click in, this email confirms your access to options level 1 Iron Shell, options level 2 Iron Striker, and then your 14 months, you're entitled to free 2 months here. So basically in total 14 months of the Wave Rider subscription. So, and also here there's actually a button where you can actually click on it, and you can actually follow the step-by-step onboarding guide on how you can actually have access to the videos and how you can actually have access to our Discord channels. Okay, so let me show you an example. So here's the page. So as usual at the top, we're going to have our disclaimer to actually be aware of all the scammers on Discord. And then here is what you will see, all the emails that you'll be receiving once you subscribe to your options with Rider. And then instructions on how you can actually go to our portal itself to actually see what you can actually, basically you can actually access to the portal, the videos, the past recordings here. And then there's also video guide. And then here on how you can actually join our Discord channel on Wave Rider. Okay. And then lastly, we'll also show you what are the channels you should be seeing once you actually enroll into the options Wave Rider. Okay. So everything you need is in this page. Just follow step by step for all information, and you can actually have access to the videos straight away. Okay. See. Okay, and for those who purchase the Ultimate Options bundle, you'll receive a similar email as well as what I shared previously. Again, it will show you what's inside the Ultimate Options bundle here, which the Options with Rider Mentorship 1 year and the Options Tactics Playbook for 1 year. So, but then again, do remember that if you sign up today, it will be 14 months in total here. We've actually extended, we've put inside the email as well. So extended for both Options with Rider Mentorship and Options Tactics Playbooks to 14 months. So here are the access that you'll be receiving, includes all the following. Do note that for the Options Tactics Playbook, as mentioned by Adam earlier, it will begin on 1st September 2026, just to ensure that you have enough time to actually see all the videos on the Wave Rider first, and then the strategies in the Wave Rider first before maximizing and using the OTP subscription at its fullest potential. Yeah. And then again, you can click on this button here. It will lead you to the onboarding page on what you should be receiving on your end. Again, what are the emails that you're receiving? Instructions on how you can actually see the Wave Rider materials, such as the videos, the bottles. So everything is here. Instruction on how you can actually access the OTP, which is on the 1st of September. So on the 1st of September, we will actually, once the access is activated, we'll be emailing you on the access activation on how you can actually access it. But it's also here as well for you guys to actually take reference from. There's also video guides, and again, steps on how you can actually join in the channels. Again, for those who join the Ultimate Options bundle, you'll have an additional access, which is to the Options Tactics Playbook community itself. So the Discord channels that you should be having access to are all stated here, so you can actually take reference from it. Yep. Sure. See if there's any questions that I can attend to again. Question from Josh. Will this help me if I'm still new to options trading? Yes, the mentorship is actually built to support both beginners and experienced traders. So if you're newer to options, and you might, from what Adam mentioned previously, some of you who are still new to options, you may find it confusing. But this Wave Rider mentorship is structured in a way where we're gonna actually assist you throughout your whole journey with us. If you're newer to options, the structure somehow will makes it very straightforward to follow. You'll start with options level 1 iron shell, where all the fundamentals are taught clearly. Once you're comfortable, then you proceed on to level 2, which is where our videos are, and takes you to more advanced strategies and real-time market application. Then on top of the course lessons, you'll have 14 months access of the live workshops that is happening. Firstly is the onboarding workshop, which is very, very crucial for beginners. So it's going to be held every 2 months and are designed to actually help newer traders to get set up, place their first trades, and use the tools confidently. Then throughout your subscription, you also have ongoing support through the options traders discussion group on Discord. Then we have the monthly e-gatherings, monthly strategy deep dive, live trade hunts with Bang, quarterly trading psychology classes. So even if you're starting out, you'll have full guidance at every step of the way. And if you're more experienced, the advanced setups and live mentoring sessions will help you refine your execution and decision making. Okay? And if you're, of course, if you're joining the Ultimate Options Bundle, you'll also get a 14 months access of the Options Tactics Playbook as well. So you'll get access to Bank's premium monthly reports, real-time trade notifications on Discord, and OTP discussion channels, which gives you even more support as you grow. Okay, I hope that answers your question. How much is the renewal after 1 year? Okay, so basically this depends on which option you're referring to, but let me just clarify both. So if you're joining just the options with Rider mentorship only, if you would like to actually extend your mentorship further than 14 months, your renewal is SGD 1223 per year. So its regular price is about 3,497. So if you're under our renewal and also an existing subscriber, you're actually getting about 65% off for renewals. And if you're getting the ultimate options bundle, then you'll have actually two renewals for the following year. If you'd like to extend after the 14 months, which is first the options with Friday renewal, which is SGD 1223, the one I mentioned previously, and also the options tactics playbook renewal. For options tactics playbook renewal, the renewal cost will be SGD 1978. And we are retailing at SGD 3297. So it's about 40% off exclusively for our existing subscriber. So whether it's mentorship alone or the full bundle, you're renewing at a significantly discounted rate compared to retail prices. Yeah. Is there any bonus if I join today from Jason? Yes, when you join today, as I mentioned previously, you'll get an extra 2 months of mentorship access. And you'll have 14 months instead of 12 inside the options with Rider mentorship. So if you purchase the options with Rider mentorship, instead of 12 months to the mentorship access, you'll have 14 months in total. And if you purchase the ultimate options bundle, and then you'll have, of course, 14 months of the options with Rider mentorship and 14 months of options tactics playbook. So 2 months additional access for both with Friday and OTP. Okay. I'm an existing with Friday members and I wish to subscribe to OTP a la carte. You have an exclusive. Okay, so for those existing with Friday members who already subscribed to our with Friday previously and wish to subscribe to OTP as an a la carte, my colleague will drop you an email. Drop you a link in the chat below, so you guys can actually purchase it as an a la carte. You'll have an exclusive offer just for you. What if I can't attend the OTP live monthly premium reports? Not to worry, you won't miss anything. So like I mentioned, for those who I think she's referring to this for the ultimate options bundle, and subscribing to OTP will have access to the live monthly webinar by Bang. And she said that she's worried that she can't attend. Not to worry. The session will be recorded and will be uploaded to the portal. And once it's ready to be viewed, we're going to actually notify you via Discord. So not to worry. For all the live session that you will see here, even for the options with Rider mentorship, the session will be recorded and uploaded to the portal. Okay. Will I get reminders for the live webinars? Yes, definitely. You'll receive reminders for every live session through Discord and email. So usually we're going to send it out a week before the webinar. So you can actually see the topic, the Zoom link, and the schedule. And if you can attend, like I mentioned, the video is actually recorded. Yeah. Then let me show you an example on what you'll see. Let me see. It's this. Oops, sorry. Okay. So if you were to if you subscribe to the options with Rider or the ultimate options bundle, okay, so once you subscribe to either one of it, and if you were to log in into our portal, here is what you will see. You'll basically have access for options with Rider, right? You'll have access to 5 curriculums here. You can actually see. So options level 1, Iron Shell, is where the basic videos on how you can actually build your options foundation can be found here. So you can see all the videos here. Okay, let me show you a bit of. So basically, you can. Yep. So all our on-demand videos can be watched here. Okay, for options level 1. And then similarly, for options level 2, it's where the advanced strategies are. So the on-demand videos are basically located here. And then, like I mentioned to you, for our skills revision and our onboarding webinars, for those who are unable to attend, we actually do record it and upload it to the portal. So it's going to be uploaded here, Options with Rider Mentorship, Options with Rider webinar recordings or the Options Explorer webinar recordings. So most of the Iron Shell strategies that we share and we conduct the webinar, the recordings are uploaded under Options Explorer. For the level 2 advanced strategies will be uploaded to the Options with Rider webinar recordings. So you can actually find the recordings here. Okay. And then, of course, the Options with Rider mentorship portal is a portal that you'll need to actually first click on it when you actually have subscribed to a Wave Rider or our Ultimate Options bundle. So you can see on how you can actually get the most of the mentorship program, like a video, a starter guide, how you can actually join the Options with Rider community on Discord. We also have webinar schedules here where you can see the lineup of webinar schedules that is happening throughout the year here. And of course, you can actually add to your Google Calendar as well. Okay, so all the session is here. So the next one, as you can see here, would be on the 20th, would be the Options with Friday Skills Revision at 8 p.m. Okay. So for those who actually subscribe the Options with Rider or the Ultimate Options bundle, this is the upcoming webinar schedule that you guys can look forward to. So on the 20th of July, we'll be going to having the skills revision where we'll be going through the bull bang collar strategy. And then on the 27th would be our monthly gathering where Bang will conduct his market update and live trade validation. And then on the 3rd August, skills revision. As you can see here, August, we have another basically a monthly gathering by Bang, basically here. So it's going to be held every Monday at 8 p.m. Singapore time. You can actually check on the calendars, the schedule on our portal as well. So basically, this is just a lineup. Okay. Let's see. Okay, can I see? Is there any more question? Okay, for all those asking about the recording of yesterday, not to worry, you'll be receiving the email by the end of today about it. Okay, so you can actually take a look at it. Yep. So for those who are interested, please scan the QR code again. The Ultimate Options bundle for those who wants to purchase the Ultimate Options bundle is the one above here, which is the best value. You can scan the QR code. What it includes is the Options with Rider mentorship. Okay, for 14 months, basically an additional 2 more months for if you actually purchase it during our current sale that's happening right now. And then on top of that, you also have the 1 year access to the options tactics playbook. You will also receiving 2 more months additional. So 14 months of Wave Rider mentorship access and 14 months of OTP access. Do take note, however, for the OTP, the access date will start on 1st September 2026. Okay. And then for those who wants to purchase the options with Rider mentorship, without the OTP. The option is actually below. You can scan the QR code here. Again, lifetime access to options Iron Shell level 1 and Iron Striker level 2. And also 14 months access to the to the mentorship, where you're going to have access to the onboarding workshop, the monthly strategy deep dive, monthly e-gathering, the discussion group on Discord, and the quarterly trading psychology class with Adam. Okay, so for those who wish to subscribe now, please scan the QR code. I think that's about sums it up on the admin Q&A. Okay. So I think let me do just a quick recap so everything's clear before we move on. So again, like I mentioned just now, if you're going for the options with Rider mentorship only, which is the one at the bottom, you get lifetime access to options level 1, Iron Shell, and level 2, Iron Striker. You get all the live coaching, e-gathering, street hunt, strategy deep dive, and psychological lessons for 14 months. Basically 12 plus 2 bonus months provided if you subscribe during this sale. And you get full access to the options traders discussion group on Discord as well. So again, as I mentioned previously, if you join today, you'll enjoy 14 months of mentorship instead of 12. That's your anti-bubble mania bonus. And if you're going for the ultimate options bundle, that value is even stronger. You get everything in Wave Rider, plus the full options tactics playbook subscription, also extended to 14 months. So it's the most complete package if you want tools, alerts, watch lists, and real-time insights on top of the mentorship. So if you're ready to get started, just scan the QR code or click the link in the chat. So before anyone leaves, stay in the room, okay? Stay in the room, because up next, like as mentioned by Adam, Bang is taking over with his topic, the profit box strategy. Get paid whether the AI frenzy pumps or stalls. So in this webinar, he'll be showing you how to identify the market's strongest opportunities and use his profit box strategy to collect steady premium income, whether the market goes up a little, down a little, or nowhere at all. So grab a quick drink if you need. Go to the toilet if you need. But stay right here. Bang session is starting next. Okay. Thank you, everyone.